आप सीक्वेंस कैसे नंबर कैसे
28 29 30 है।
चेक हेलो चेक
Hello, testing 1 2 3. Hello, hello, testing. Hello, testing 1 2 3. Hello, hello.
Be starting this seminar on strong, sustainable, balanced, and inclusive growth in a few minutes. Kindly request everyone to please be seated. Thank you.
Check. Check what? Hello.
Good afternoon, everybody. Honorable Finance Minister of India, Secretary Economic Affairs, Secretary Department of Commerce, Secretary Ministry of Skill Development, Chief Economic Advisor, distinguished panelists, and esteemed audience who have joined this event in person and virtually. Thank you very much for joining us today. Before we begin the event, I request Honorable Finance Minister and the Secretaries Economic Affairs, Commerce and Ministry of Skill Development, as well as Chief Economic Advisor, to please join us on the stage. Thank you very much. It's my honor to welcome you all to this seminar on strong, sustainable, balanced, and inclusive growth, which is being jointly organized by Ministry of Finance, in collaboration with Ministry of Commerce and Industry and Ministry of Labor and Employment. May I now invite Secretary, Department of Economic Affairs, Mr. Ajay Seth, for his opening remarks. Sir.
I hope I am audible now. Okay, thank you. Honorable Finance Minister, my colleagues from Ministry of Commerce and Ministry of Skill Development, Chief Economic Advisor, distinguished panelists and participants who have joined in person and virtually, a very good afternoon. I welcome all of you in this seminar on strong, sustainable, balanced and inclusive growth organized by Department of Economic Affairs in collaboration with Ministry of Commerce and Ministry of Labor and Employment and Ministry of Skill Development. Today, around 500 youth and budding entrepreneurs, including 70 from G20 countries under Jagriti Startup, and they are on G20 Train Yatra, are participating in this webinar virtually from Devariya and Uttar Pradesh. I welcome them also to this webinar. Under the leadership of Honorable Prime Minister, India delivered a very successful G20 presidency in 2023 based on an ambitious and people-centric agenda. The unanimous adoption of the G20 New Delhi Leaders Declaration signifies India's ability to generate consensus among a diverse set of countries and the willingness of countries to collaborate despite geopolitical tensions. The NDLD marked a high point for global multilateralism, and it is important that the momentum is maintained. The outcome delivered over the course of Indian presidency are captured in the New Delhi Declaration under 10 broad themes. It is important to note that the G20 agenda typically covers multi-year issues, and so the work must continue under successive presidencies. Simultaneously, we also need to act domestically on the G20 policy guidance in the declaration and lead by example. Under the guidance of Honorable Prime Minister, therefore, it has been decided to hold several outreach events to disseminate and act on the Leaders' Declaration. This seminar is being held in this context. The first theme in the Leaders' Declaration relates to strong, sustainable, balanced, and inclusive growth. Under this theme, the NDLD provides policy guidance on trade, the future of work, and financial inclusion. The objective of this seminar is to discuss the outcomes in these areas and explore their implementation under the next G20 presidency and beyond. With India joining the G20 Troika for 2024, along with Brazil and South Africa from December of this year, it will be our collective responsibility to further the SSBIG agenda and advance the interests of Global South. In today's seminar, following the inaugural event, we have 3 panel discussions on trade, the future of work, and financial inclusion. The panelists are highly distinguished in their respective fields and can provide valuable perspectives to the issues under discussion. We thank each one of them for accepting our invitation to participate. With this, let me stop here and request Honorable Finance Minister to deliver the keynote address.
Good afternoon, and thank you for giving me this opportunity, Ajay, and ladies and gentlemen. On December 1st, 2022, when India assumed the mantle of G20's presidency, Honorable Prime Minister wrote, and let me quote his words, "Can the G20 go further still? Can we catalyze a fundamental mindset shift to benefit humanity as a whole?" Unquote. Throughout this presidency year, this call from the Prime Minister was the clarion call for India's G20 presidency. Concerted efforts were taken to mainstream the concerns and aspirations of the Global South, to explore how technology can be leveraged for the benefit of all and for the development of all, and to develop solutions for enabling multilateral institutions to become more effective in addressing the complex development financing landscape of the 21st century. The G20 New Delhi Leaders Declaration, unanimously agreed to by all G20 countries, addresses some of the pressing challenges confronting the global economy and also provides a policy guidance for a future built on people-focused principles and trust-based partnerships. As Ajay mentioned, even though by the end of this month, our role as G20 presidency comes to an end, momentum must be maintained on the policy guidance of the New Delhi Leaders Declaration. Not only should we engage in G20 partners to take forward the outcomes, but we should also explore how best we can integrate these outcomes into India's domestic policy making process so that we can lead by example. Let me now move on to the theme for today's seminar and share a few perspectives on how New Delhi Leaders Declaration has envisaged a strong, sustainable, balanced, and inclusive growth, which is a cornerstone of the G20's mandate. Since the pandemic, the global economy has been grappling with multiple crises adversely affecting global growth. While the recovery is underway, it remains slow and uneven. The current pace of global growth remains quite weak, well below the 3.8% average in the last two decades before the pandemic, and looking ahead over the medium term, growth prospects have weakened further. Policy coordination, both global as well as domestic, is critical to ensure that growth comes back on track and remains strong. It should remain strong and sustainable, balanced and inclusive. To this effect, the New Delhi Leaders Declaration underscores the urgency of implementing well-calibrated macroeconomic and structural policies to bolster equitable growth and enhance macroeconomic and financial stability. Under the theme of strong, sustainable, balanced, and inclusive growth, the declaration focuses on trade, the future work, and financial inclusion. I suppose those are the panels that are going to be discussing on the topics. All three are pivotal for stimulating global growth. I am sure that the ensuing panel discussion will elicit valuable perspectives and insights. Under our presidency, the G20 placed close attention to integrating MSMEs into international trade. MSMEs account for 90% of businesses, 60 to 70% of employment, and 50% of GDP worldwide. They play a key role in sustaining livelihood, in particular among the working poor, women, youth, and also groups in vulnerable situations. However, the MSMEs, particularly in developing nations, often struggle with limited access to information, hindering their international trade involvement. To help address this challenge, the New Delhi Leaders Declaration welcomed the Jaipur Call for Action, which aims at promoting the MSME sector as well as bridging information gaps for MSMEs to help them expand in their business and trade. While presenting 2023 Union Budget, I had noted that the MSMEs are the growth engines for the Indian economy. India can definitely lead the way in ensuring that the actions set out in the Jaipur Call for Action continue to be taken forward through the G20 and the WTO so that the full potential of MSMEs can be fully exploited. The role of technology as a tool for social transformation and economic empowerment was a subject of discussion in the G20 under India's presidency. This has become most evident in the financial inclusion landscape. The Leaders' Declaration provides concrete policy guidance on leveraging the benefits and minimizing the downsides arising from the impact of technology and development. Digital public infrastructure and the manner in which it has revolutionized the Indian financial inclusion landscape has been lauded globally. India has been at the forefront of this revolution, and India's own growth story has gained significant momentum through digital public infrastructure. DPIs also play a crucial part in G2P payments, ensuring targeted, transparent payments, and promoting the inclusion of vulnerable groups such as women, students, and the elderly. With over 50 crore Jan-Dhan bank accounts opened and a monthly transaction volume of over 10 billion through UPI, India's example vividly illustrates how DPIs have enhanced not just access, but also the usage and quality of financial inclusion. Drawing inspiration from India's successful implementation of India Stack, the G20 policy recommendations for advancing financial inclusion through the DPI was endorsed in the Leaders' Declaration. These recommendations provide guidance on developing well-structured DPIs, establishing risk-managed regulatory frameworks, promoting strong governance, and ensuring that DPIs serve everyone. DPI is also embedded within the G20 New Financial Inclusion Action Plan for 24-26, for 2 years that is. With India now on the co-chair of the Global Partnership for Financial Inclusion, which is tasked with the implementation of the action plan, we will have a key role in building on the foundational work done during our presidential year. The New Delhi Leaders' Declaration recognizes that well-integrated and adequately skilled workers benefit origin and destination countries alike. It also emphasizes the importance of addressing skill gaps globally and provides a comprehensive policy guidance on this respect. G20 policy priorities for addressing skill gaps globally, facilitating cross-country comparability and mutual recognition of skills, qualifications, and comprehensive toolkits for upskilling and reskilling are areas that the Leaders' Declaration has addressed. So, ladies and gentlemen, I opened my remark quoting Honorable Prime Minister's vision for G20. As I reflect on the last 1 year, I believe we have delivered a G20 presidency that has provided clear policy direction for addressing the needs of the majority of the global population, whose voices are often unheard in global multilateral forums. However, we still have work left to do. I look forward to valuable perspectives from today's discussions, which can contribute to our preparations for the upcoming virtual G20 Summit. These insights will also help us to carry forward the vision of the New Delhi Leaders' Declaration in collaboration with succeeding G20 presidencies. I extend my best wishes for a successful seminar. Thank you very much.
Thank you very much, Minister. I now request Chief Economic Advisor for a vote of thanks.
Good afternoon. Honorable Finance Minister, Secretary Economic Affairs, Secretary Ministry of Commerce, Secretary Ministry of Skill Development, distinguished panelists, participants who have joined in person and virtually, A very good afternoon to all of you and welcome. On November 22, 2023, the G20 leaders will be meeting virtually for the last meeting under India's 2023 G20 presidency. As pointed out by the Honorable Finance Minister, with Brazil taking over the presidency of G20 on 1st of December this year, it is a good time to reflect on the Indian presidency outcomes and also identify how policy conversations can continue to be advanced. I now move on to the responsibility entrusted to me today. Ma'am, I thank you very much for inaugurating today's seminar and sharing with us your valuable perspectives. Your guidance will immensely help us in ensuring that the panel discussions to follow, and which we have planned for today, will end up achieving a very deep perspective on various options for carrying forward the policy recommendations encapsulated in the New Delhi Leaders' Declaration. I also take this opportunity to thank Secretary Economic Affairs for his valuable insights and for clearly laying out the rationale underlying this seminar. The moderators and panelists, to them, we owe a special thanks because they accepted our invitations at very short notice and have joined us today. Many of them have also been part of the G20 journey over the last 1 year, either as presidency leads in various work streams or as representatives of international organizations. The rich experience that each one of them brings is significantly going to contribute to the quality of the panel discussions today. Last but not the least, on behalf of the teams from the Department of Economic Affairs, Ministry of Commerce, and Ministry of Labor and Employment, I thank each and every member of the audience for their presence, both physically and virtually. All of you can play a very important role in advancing the conversation that we will be having today, and therefore, we look forward to active participation. With this, we conclude the inaugural event and begin the preparatory work for the 3 important panel discussions, one on the importance of trade for growth, the future of work, and on digital public infrastructure. In a short while, the first panel discussion on unlocking trade for growth will start. With this, I request the logistics team to make the necessary stage arrangements for the first panel, and with this, I bring to close the inaugural session of today's seminar on strong, sustainable, balanced, and inclusive growth. Thank you.
We will now move on to the first panel discussion on unlocking trade for growth. May I now invite Commerce Secretary Mr. Sunil Bartwal as the moderator of the first panel discussion. Mr. Sunil Bartwal is the Indian Administrative Service Officer of Bihar cadre. During his rich and varied experience as an IS officer, he has held various administrative positions in the areas of finance, social security, investment, infrastructure, mines, steel, energy, transport in the government and central and state level. He was also the CEO of Employees Provident Fund Organization. I would also like to welcome on stage our esteemed panelists for this session as I take their names. Please welcome Mr. Mondir Mimoni, Director, International Trade Center, who will be joining us virtually today. Mr. P.K. Singh, CEO, Government E-Marketplace. Mr. T. Koshi, CEO, Open Network for Digital Commerce. Dr. Deepak Mishra, Director, ICRIAR.
down.
Thank you all for joining us. May I now request Commerce Secretary to give his opening remarks and take forward the panel discussion. Sir, the floor is yours.
Okay, thank you very much. Good afternoon. I think there is some echo. Good afternoon to there is some echo. Hello? No, there's no point, no? Hello? Okay. So, a very good afternoon to all of you. I welcome my fellow panelists, very esteemed ones, representing very important organizations. I think from ITC, the director is joining on VC. I can't see him, but I hope that, oh, I can see you. Right, good evening, good afternoon to you. And all the distinguished guests, Chief Economic Advisor, and my colleague in Ministry of Skill Development, and other eminent guests, ladies and gentlemen. So as Honorable Finance Minister talked in her opening remarks that in the G20 Leaders Summit in New Delhi, there was a reference to call for action, Jaipur call for action, to be precise. So that related to the Trade and Investment Working Group, where we discussed how trade can unleash growth internationally in the world. And when we were discussing the trade issues and how trade can become an engine for inclusive growth, we realized one very, very important thing, and that was that MSMEs, which constitute more than 90% of the enterprises in the world, and in fact, it also came as a surprise to me because I used to think that MSME is a phenomena only restricted to developing economies. But if you look at what WTO says, it is more than 90% enterprises are MSMEs in the world. They contribute to almost 60 to 70% of employment in the world. But if you look at their trade participation and trade integration, particularly if you look at the manufacturing sector, it is hardly 7.6%, which is extremely low. And therefore, in the Trade and Investment Working Group, we decided that we should look at, the G20 group should look at how we can make MSMEs better access to trade. And unless and until this more than 90% sector is not involved in the trade activities, the global trade activities, perhaps growth through trade cannot be inclusive. And when the G20 group started looking into what are the issues which are hampering this particular integration of MSMEs, we realized that one of the important issues was, other than finance and technology, was information. MSMEs were not having information with respect to international markets, international trade, what are the regulatory systems around the world, how the tariff and non-tariff barriers operate, how the standards operate. And therefore, despite being such a large constituent in terms of manufacturing, in services, they were not part of the global trade to that extent. And therefore, in Jaipur ministerial meeting, a call was given, and that is called the Jaipur Call for Action for MSMEs. We decided that although different countries are having their own portals for dissemination of information, India also has a good one, and similarly other countries do have their own portals. But there was not a single portal which can look at their issues. And in the G20 Trade and Investment Working Group, we looked at this issue, and we found that ITC, as in collaboration with WTO and in collaboration with UNCTAD, can be a very good forum, because it has worked on MSME information dissemination. But perhaps that portal requires upgradation, that portal requires modernization, that portal requires better access to MSMEs. And therefore, in this call, we decided that let ITC become the nodal organization for taking this access to information for MSMEs towards global trade as the main trade portal. And this portal should develop it further in collaboration with all the countries, including the G20 countries. And the national portals should get integrated. The information flow should be to this portal, because there were a lot of issues regarding the commercial sensitivity of the information being provided by different companies, different traders. So that became a call for action, Jaipur call for action, to better integrate MSMEs into the global trade. So what I intend to do today now, with this brief introduction, that we have time till 4:30, because there will be another panel discussion, and I do not want that panel discussion should gets delayed even by 1 minute. So we have very prominent, eminent panelists over here, and I would be putting few issues to them which will take this discussion forward. And let us see how, what kind of actions which have to be taken by the different organizations to take this agenda forward. So let me begin with ICRIAR, Director ICRIAR, Mr. Mishra. Mr. Mishra and ICRIAR was deeply engaged with us. What do you feel the Jaipur call for action, what kind of actions would be required? To what extent those actions are in the realm of different domestic governments? To what extent those actions are in the realm of ITC, WTO and UNCTAD? And what is the way forward of realizing that call for action in the Jaipur ministerial meeting of Trade and Investment Working Group?
sure that it's on. Is this on? Hello, can you hear me? Hello? Okay. Hello. Yeah, good afternoon, everyone, and thank you, Mr. Bharatwal, for choosing to focus today's discussion on the Jaipur call of action, because there are three priorities that the Trade and Investment Group focused on, and I'm glad that we focused on this particular one, a topic that, as Secretary said, ICRIER had the privilege of supporting the G20 Trade and Investment Working Group as MOCI's knowledge partner. You've heard a lot about why it's so important for MSMEs to be integrated in the global trade, and among the topic that you heard in the initial discussion, the big story is about inclusion of MSMEs into the global trade. So when we started this topic, I remember the first Trade and Investment Working Group meeting that we had in Mumbai. There was a stiff opposition from many G20 members as to why do you need another interface. The current one is pretty good, and the Global Trade Help Desk, which is developed and maintained by ITC, is today's the most well-known and one-stop shop for information for MSMEs engaged in global trade. But even with GTH, we found that, let's say, a Kenyan farmer trying to export coffee to US, and interestingly, we actually choose Kenyan farmer not knowing that India will actually make Africa Union a new member of G20. But think of this, a Kenyan farmer trying to export coffee to US. We found that to gather information about what needs to be done, this entrepreneur will have to visit nearly 16 different websites and have to spend several days to compile the information. In fact, the entrepreneur will have to perhaps hire a postgraduate student in economics, because to access this website and ask the right question, you need information like the HS code, the legal knowledge, and English proficiency to do this task. So the bottom line is trade informations are still fragmented, they're costly, especially for MSMEs, they need a lot of effort, expertise, and finance to put this together. So the Jaipur call of action for MSMEs is a credible solution to this problem. What are we proposing here? So the Indian presidency proposed to develop an AI-powered interface, and we called it Meta Information Interface, or you can call MII, you can call it Made in India, that will draw information from existing portals, specifically on markets, tariff and non-tariff measures, logistical and financial information, and present it in a user-friendly way. MII will have three distinct functions. First, it will synthesize information from diverse sources into commercially meaningful intelligence. Second, it will enable conversational search rather than written search. You could actually ask query verbally. And finally, it will be accessible in multiple languages. And the last two are very important for a country like India. And what's good about this interface is that it can be developed within the current policy on data transfer, privacy, and intellectual property rights. And it can build on already existing available data shared by member countries to ITC, so it doesn't really need a new system and new databases. And I think it's a huge achievement for India's G20 presidency that a credible and reputable organization like ITC has agreed to develop and maintain this. So there is certainly going to be a lasting legacy of India's G20 presidency. In terms of what it means for domestic audience, I think one of the things that we have debated is, should India have its own meta information portal, given all the information that we have on the government realms, which are fragmented in many places. So that's something that we should be thinking about. DPIIT and others actually are starting to discuss that possibility. Thank you, Mr. Bharatwal.
Thank you, Deepak. In fact, you clarified, that what are the issues involved, and perhaps issues are quite complex. It involves many different countries, and I also understand that the task which is cut out for Mr. Mondair Mimoni Director of International Trade Center, Geneva, who has joined us virtually. I would like to ask you, Mr. Mimoni, that given that you are already running Global Trade Help Desk, which is doing well, of course, there is always a scope for improvement, but certainly after this Jaipur call for action, I think it has become your baby in the sense that now there is a whole pressure on you from not only G20 countries, but from all other countries. So perhaps you would like to tell us that what do you feel, what way ITC can take this Jaipur call for action forward? What are your expectations from different countries, especially from India, because we are deeply involved into this? And what kind of AI solutions or IT solutions you are looking forward to? And what way you feel that the different countries should be collaborating and contributing, which help you in making this dream come true. Although I again and again say that there is already a help desk which is being run by you, but definitely there is a huge scope for improvement, huge scope for further collaboration. So in that spirit, what do you feel, what is your role, and what do you feel, what should be the role of different countries like India?
Thank you, Secretary Bhawan. It's an honor. Thanks for the invitation. It's really an honor to be here on this panel with you, alongside the other distinguished panelists. Good afternoon to you, as well as our estimated audience, large audience of Indian businesses representatives. First of all, allow me to extend my sincere congratulations to India for its strong leadership, and to the member of G20 Trade and Investment Working Group for the commendable and tangible outcomes. The Jaipur call for action, as you said, is a great achievement. It recognizes the importance of small businesses as the fundamental building block of all economies and aim to empower them to harness new trade opportunities. As our previous panelist said, they represent even more than 90%, in some countries even 95% of the businesses, and they are key player and the key engine of our economies. Together we can revolutionize how quickly and easily firms are able to access the information. They need to make strategic export decisions. We can help level the playing field for small firms with regards to market information to support inclusive growth in India and across the globe. Without information, or with this dissemination of information, we are excluding many small countries, many developing countries, and we keep them exporting to traditional market without any opportunity to diversify their economy and to move up in the value chain. At the International Trade Center, we have been working for decades to gather detailed trade information. It was our mandate 60 years ago when we were created, helping them to develop or collect, disseminate the statistics, tariff and regulation information, rules of origin, market price information, among others, for our suite of market analysis tools used by millions of users. But they are quite technical, and this is why we thought with other partners to move to something much more user-friendly, dedicated to the business, to MSMEs around the world, and that we call the GTH. This data that we are collecting cover more than 200 economies around the globe, has been brought together alongside crucial information from WTO, UNCTAD, World Bank, and other agencies to create then our global trade help desk. I'm grateful for the recognition of the Global Trade Help Desk within the Jaipur Call for Action as an inclusive platform for trade information, and for the vote of confidence that we can expand its functionalities to better meet the needs of MSMEs by making them information even more accessible, as have been said by Deepak. We all know that small firms are big on talent and potential. They manage all our economy, but pressed for time and resources. So we created this freely accessible platform that simplifies market research by centralizing relevant information through a single digital entry point. It combines information across 14 different global databases and 11 partners to provide a strategic overview for your product in a specific target market. But I know the best is to come. Emerging technology, as it has been said, are changing the way we interact with data and helping us from the simplified way complex information into clear and actionable fragments. Thanks to the promise of emerging technology, we can make the process of identifying and comparing new opportunities even easier for millions of MSMEs in India and the global South. The technological enhancement we are planning will allow Indian companies to seamlessly find the information they need and be guided on any challenge they face in identifying their product code or understanding market access condition or any other market analysis related to questions they may have. What we need from countries and our expectation, for sure, we need to keep improving, enhancing the functionalities of the GTH. We are working with many countries, as I said, we are working with more than 200 countries and economy to get their data and to make their data user-friendly and used by all the others to improve the transparency, to put them in the radar. We will be extremely pleased to keep doing this in collaboration with India and to keep upgrading and improving our tools. In some other instances, we move to real-time information. This is what we are doing for some countries in Africa, meaning that you can know today what's happening, what's going on today. And it will be our dream is to extend this to all countries. The technology is here, but now we need to work with partners, and India could be one among the key partners to work with. This is why we are convinced that Jaipur Call for Action is so valuable and is a game changer to make the GTH and other tools even more known around the world. Thank you.
Thank you very much, Mr. Mimoni. So, I think I was not expecting that this much work has already gone into what you told me just now, and we are really glad because Jaipur Call for Action was only in August, and although you were also involved in greater detail in those meetings which we started from the month of March, but I'm really glad to hear you that so much work has already gone into this and you are in touch. And you are in touch with WTO, you are in touch with UNCTAD, and you are in touch with different countries. A lot of work is happening. You are looking into a lot of IT solutions. Now, coming to the IT solutions, I will now turn to the CEO, Mr. Koshi of ONDC. In fact, I would very much like to hear from you what ONDC can do for integration of MSMEs into international trade. Although you as a network is doing wonderful work in the sense that today ONDC is what ONDC is to e-commerce, what UPI is to digital payment system. You have developed, the whole public digital infrastructure, which just now Honorable Finance Minister was mentioning, which is democratization of technology involving startups and everybody into technology domain. There is a whole B2C kind of ecosystem which you have developed. And there is a huge demand, particularly from MSMEs, not only demand, but I think it has a huge potential for MSMEs that lot of international trade is now moving into digital trade. And when you move towards digital trade, it gives MSMEs a better footing in the sense that MSMEs can join these trade portals with least cost. There can be aggregators who can aggregate this, if the scale is low, which cannot be shipped out. And perhaps now the e-commerce is becoming a major kind of modes of integrating MSMEs into international trade. So from that context, I would like to ask you, Mr. Koshi, that what do you feel that what can be the future plans of ONDC with respect to integrating MSMEs, particularly the B2B integration? In fact, before I go to you, I will also tell the audience that the GVC integration of MSMEs, unless and until the GVC integration of MSMEs happens, MSMEs integration into the global trade would not happen to that extent, to the extent which we desire. So I think when these B2B e-commerce transactions happen, it will also allow, and the access to information which we have been talking about, it will allow MSMEs to get integrated into the global value chains. And let me spend one more minute on the global value chains. I would like to say that 70% of the total trade is now through the GVCs, which means that if MSMEs better integrate into the GVC system, and there are a lot of options for MSMEs to get integrated into GVCs, because if you look at the way, there are thousands of components in an iPhone. The accessories, another set of components which get into accessories, which, the major instrument makers don't do. They allow the ancillary industries and the auxiliary industries to do that. So in fact, there is a huge potential for MSMEs to integrate into the global value chain. So from the context of e-commerce, their involvement into greater trade as such, as well as GVC integration, what do you feel that, what is the potential and how you look at that potential from the business point of view?
You can hear me? Yeah, cool. Thank you. Thank you for giving an opportunity to ONDC to come and share with you what are the kind of possibilities that the idea of open network is going to provide for this global integration, specifically for MSME. As you're aware, ONDC is the latest in the India stack. So we have started our full-fledged operations in a way only in the last few months. So I can share with you what are the various steps that are already taken and that is in the pipeline, which is very much in light with what the Honorable Commerce Secretary has just highlighted. As you know that we've started with B2C in a very limited fashion in 3 segments. So when we made these things visible to the public at large to take advantage in January, we had started with only 3 segments, which is grocery, food, and mobility. But in the last few months, building on the confidence, humongous amount of new initiatives have been taken. The B2C, while is been what is started, B2B has already begun in few areas, and significant initiatives have already been taken in B2B. In the last 1 month when we enabled on a pilot basis the B2B, we've already done about 40,000-50,000 transactions. And we have brought together a large number of entities who are wanting to take serious position in the B2B segment for a workshop, and they have all now started integration with a few hundred of them and the various stages of integration. As you're aware, the idea of open network is breaking of walled gardens, which would mean that if a seller is able to make its catalog visible in the open network using open protocol, the ONDC protocol, he can be discovered by any buying application coming from India or internationally, and consummate an order. It's not a discovery like Google. It is to discover, agree on the terms and condition, agree on a contract, and consummate the order. When you say consummate the order, the open network also provide as building block, not just a buyer interface or seller interface, but also logistics, warehousing, documentation. All these are nothing but services as part of the network. So if I say what is the ultimate vision on which ONDC is working, is that any product or service that is catalogable will be visible in this open network, and different buying applications will help their kind of clients to buy what is relevant for them. This is the ultimate aim. So in this, let me just highlight some of the very important components of this vision, how it is helping in this larger vision that is given in the Jaipur call for action. One is that it gives a common theme for a variety of enterprises to come together to give a supporting hand to the industry, specifically MSME, to take advantage of this digital world. Probably some of you would have already seen the announcement by the Ministry of Small and Medium Enterprises, with whom we have worked together and developed a complete scheme, which I think is going to be launched, rolled out in the coming weeks, to help MSMEs across the country to go through the whole process of taking advantage of this digital world. What do you mean by taking advantage? It's not just about technology. Technology is an important component which is being ready through this protocol. But it's also improving their business processes, enabling them with the capacity to behave in the digital world, especially if the demand is going to come from not just their local market, but market across the country or across the world, and how to make good documentation, and also give them a hand-holding support for a certain period of time. This is an initiative already launched, announced and going to be launched. And the beauty is that this kind of initiative is coming from a variety of organizations. I gave you the example of MSME Ministry. Same has come with the Ministry of Agriculture from the Farmer Producer Organization. We have seeing the similar kind of support coming from the various state MSME ministries. We are seeing the similar kind of enablement support coming from SSBIG, NABARD, such national institutions, also working on the same theme of empowering small and micro enterprises to be digitally visible and enhance their market and enable them to meet the demand that is coming from India as well as internationally. So in addition to that, we are also seeing the similar kind of initiative coming from even philanthropic organizations, because now there is a common theme. Earlier, everybody was trying to create their own portal. And you know how painful, expensive it is to create portal, and more importantly, even to get the customers to come. Unless you have some guaranteed buyers coming from any legal mandate, which is possible within a country, but which may not be possible across the countries. So this kind of initiative is what is driving. So so level one is enable the MSMEs to take advantage of the digital world. Second is give them the necessary building blocks without they have to invest on it, like whether it is documentation, especially when it comes to international documentation, whether it is for warehousing, whether it is logistics, so that once they are visible to a buyer from faraway city or within the country or across, it's possible. Third is to make sure that they are, they are also given the, a way to declare whether they are internationally, ready for international shipment. These kind of additional components are being added. Further, we are also trying to build what we call an open data framework for all the participants in this, in this network. The idea of this open data framework is to make sure that non-competitive, non-PII aggregate information is brought together, especially on trends, etc., is made available to all the participants without somebody trying in between and try to sort of rent-seeking on it. And the advantage is when we build up these kind of information, this will also naturally become a input to the larger ITC initiative of having global informational base. Because at the end of it, if you do not have a mechanism to develop this data from within the country, and it cannot get consummated, and otherwise, unless you get consolidated timely information which are relevant, it's of no use. So, which means that these kind of experiment that is being done in our country become a fantastic case study. And this for the world to sort of imitate on benefit and can be a contributor to the ITC. And in addition, let me just take the last point here, such a strong digitally verifiable data also enables access to finance at much competitive rates. And that itself wouldn't have been possible. That's why if you look at what we have done as an open network, I said about every product or service, we have already announced the specifications for other related services like credit, insurance, and so on and so forth. Because imagine a small MSME trying to export something to Singapore. Okay, which has all the right intention, he has all the right partners, he has everything going. Sometimes something can go wrong and there could be a loss. And the customer will not pardon for that. If this guy doesn't meet up the expectation, it's going to be a very bad name. And that is why you need even a sachetized insurance. We have started talking with the ministry to think about this kind of stuff and the insurance industries to develop this product. So the point, let me just conclude with one point, that the idea of an open network opens humongous possibilities of innovation and specialization on building blocks and come together and give a humongous helping hand to specifically those small and medium enterprises who cannot handle everything by themselves. Big guy can handle everything from one end to another they can handle, but the small cannot. And that I think is a fantastic example that we are demonstrating and which can be adopted anywhere in the world.
Thank you, Mr. Koshi. In fact, when we were discussing this issue, and finally we zeroed down on information aspect. But let me tell you that for MSMEs, how to make finance accessible to them, that was also one of the major issues which we took up. Although we did not work upon it directly, but we had a seminar which we organized on the sidelines of G20, and there was a good participation and there was good thinking going on how to make finance accessible. And I am glad that, with the digitization of their trade volume and their transactions being captured in the digital format, which can then become a collateral or a ground for seeking finance, and it is also going to be a very reliable kind of information to the banks where they can potentially finance them. I think this is a very, very important aspect which will come out as e-commerce grows and as more and more MSMEs integrate into the ONDC network. And I think on this I will take up some issues later on if time permits. But one very important issue which when we look at MSMEs is that if you look at the global supplies in terms of public procurement, so 10 to 15% of the GDP of any country gets into public procurement, which if you look currently will be around $10 to $15 trillion. And MSMEs, in fact, by many countries are favorably considered in terms of whenever they talk about the public procurement. In fact, there are various ways by which countries promote MSMEs. We promote MSMEs in India in the sense that we give them a special, if not price preference, but purchase preference. Similarly, world over, there are social value kind of systems, when they look at MSMEs, in fact, one very important aspect of MSMEs is that most of the MSMEs are either women-dominated or many are women-led. And in fact, Honorable Prime Minister has, during this, when he inaugurated the food processing exhibition, he mentioned that if you look at the food processing industry, many are led by women-led kind of entrepreneurs and the groups, many women are working. Now, GEM in India has come out as a portal which is, in a very few years of its coming up, has become a major portal for public procurement, whether it is central government procurement, whether it is CPSC procurement, or whether it is state government procurement. So I'm very glad that we have CEO GEM, Mr. Prashant Singh over here. And he has done a lot of work on how to integrate MSMEs into the GEM portal. But let me tell you, you may be thinking that how public procurement is related to the international trade. So let me tell you one thing, that as more and more FTAs are getting signed, and as more and more cooperation agreements are being signed, we are also looking at that how MSMEs internationally, they can have access to public procurement of the different countries. So Indian companies may get an opportunity, other countries from, MSMEs from other countries, they can get access to our portal. So I would like to ask Prashant that what way you feel that not only the internationalization of procurement of the MSMEs happens, but what way, the GEM portal can become an instrument for taking MSMEs forward, not only in terms of public procurement, but also in terms of getting integrated into the whole international trade.
Thank you, sir. Good afternoon, everybody. So allow me to just give a small context of GEM. We are just about 7 years plus old. And this particular year, we'll be completing close to $45 billion in our procurement. And out of that, about 50% would be coming from purely the MSE sector, not the medium part, just the micro, small and small enterprises. So the mandate of the government is about 25%. We do much more than that. Just to give you a few figures, when we started in FY17, we did, the MSEs did close to $5 million of procurement. And in 4 years down the line in FY21, they did $5 billion. That is a growth of 9,000%. And this year they'll be doing in excess of $20 billion in FY24. So coming to contextualizing how MSMEs operate in the domestic market as to what will be their role in the global trade, the problems are the same. It is just the access to credit, access to markets, access to technology, and some hand-holding support. On the domestic fronts, we have had a very rich experience in the last 7 years as to how to support them in all these 4 counts. I think the same can be replicated in the global front as well. On the access to markets, when we say how do we provide access to markets, of course, through the portal, everybody has equal access. But then what we do is also we do a huge amount of business intelligence and data analytics. We provide that information in public domain. For example, if somebody is a maker of, say, small bags, he wants to expand his business and wants to get into the business of making suitcases. He can go on the portal without logging in, find out what is the market size, how many tenders are being floated, what is the value, what are the specs that buyers normally desire. And based on that, he can take a call whether it's the right segment to enter or not. Now, such information, such real-time information is the need of the hour. We always maintain at GEM that, any kind of data, any kind of information, number one has to be correct. It has to be relevant, and it has to be timely. It can't be correct and relevant and not timely. It can't be correct and timely and not relevant. So it has to be all three to be of any sense to a business. So through regular sharing and through trying to understand the requirement of the customers, we try and give them the right set of data. Again, the requirement is different for different sets of people. For a smaller enterprise, he may be looking at a different perspective. A bigger enterprise may want a more large-scale perspective. So we have this thing called a business cockpit, wherein the users can subscribe and actually buy data from us to understand how their segment works. So as we have evolved, we are trying to change our business cockpit model also to cater to different such segments, depending on size. As regards access to credit, we can say that we did a very good experiment on Gem Sahay, wherein we allowed collateral-free loans to any MSE seller on the portal to meet the working capital requirement that is totally collateral-free, based purely on a Gem order. Now, how does it work? The lenders get the data from Gem about the past performance of the company, and depending on that, they can offer them the rate and the period. MSEs in particular look at small size tickets, small duration tickets. It is purely based on the cash flow and not based on balance sheet. So that is the first thing we have to differentiate. And now we are very happy to upscale the Gem Sahay initiative, and we'll go for all Gem suppliers. Initially, it was only for sole proprietors. So that will be a great help to the MSEs. So similar kind of thing requires to be done at the global level as well, sir. On the hand-holding part, different segments of MSE require different kinds of hand-holding. Some people require, they have to be given the right information. For example, on the global level, there are so many restrictions on quality, there are so many restrictions on, safety. People don't know of. I mean, you prepare a whole business model and then you realize you can't export to a particular destination because you don't meet the criteria. So, I mean, good effort has been done by countries like Malaysia has a government MSE corporation which has compiled everything in one place. All kinds of product-wise, country-wise regulations and guidelines that you are required to meet for enabling exports. So such things can be of good if provided they are correct, they are relevant and they are real-time. Because mostly we try to struggle with the real-time part of it. But today, as Mr. Kaushik also mentioned, technology has an answer to every such problem, and these things can be done. So the last thing is about access to technology. Of course, India is known for making great strides in the area of technology, and I'm sure that is not a challenge for us for any sector. I mean, you give us a problem, we are able to come up with a solution in the next fortnight or next 1 month. So that part, I think we are very safe and we are in very secure environment. The main issues continue to be just access to credit and the right access to knowledge.
Thank you, Prashant. And I think Mr. Memoni would be very happy, including ICRIAR, that the data which gets generated either through the ONDC or through the GEM portal is a very ready source of data which can get into the ITC help desk. So I think as we digitize more, as the procurements are digitized, as the sales are digitized, and we have also gone for digitization of the records. That was a separate, priority issue which we had taken up under G20, which was again part of the ministerial declaration. So I think these are going to help a lot the ITC help desk in taking things forward. So unfortunately, we don't have too much time. In fact, I would have asked some more questions from our eminent panelists, but I've been told that in next 5 minutes, I have to also seek few questions from the audience and hopefully reply to those questions. So, in fact, we don't have time, so please don't, don't ask a question which is itself an answer. So, so please ask your questions. Because within 5 minutes, then I have to finish it. So please see that we are also in a position to reply to you. Thank you. So anybody? Yeah. CA, Mr.
Excellent panel. Thank you. It's a question to Mr. Prashant Singh. The Gem Sahay model, what would it take to extend it to the entire MSME community? The experience of Gem Sahay, is it being documented or there case studies being written so that it can become applicable to the entire MSME sector? Thank you.
So, great question, sir. And let me tell you that it is easily replicable. We initially did a pilot, as I mentioned in my opening remark, that it was for sole proprietors based on model. Now we're in the process of developing the next 3 months, rolling it out for the entire GEM ecosystem. So all MSMEs would have access to credit as long as they get into a contract with government. Extending the same beyond this is also possible because the fintech solutions are available, the platforms are available. All that you require is to integrate. And there's so many people, coming up with different kind of ideas how to do that in the best possible way. So certainly, yes, very doable, sir.
Thank you. One more question, please. Yeah.
May
I think he's younger than you, so let me give him a chance.
Why not both? Why not to both of us?
Oh, so I think some lady is asking a question. I will give her preference. Yes. So that is the last question. Yes.
Yes, sir. So I am Sushma from CII. So my question is that, are there any best practices or lessons learned from countries or regions that have already implemented similar international reference classifications for occupations?
Oh, I think this question is reserved for the second panel. I think you forgot what was being discussed over here. So please.
Thank you, sir. My name is Nalin Kohli. I represent a small and medium knowledge industry association. So a lot of MSMEs are now exporting through e-commerce. But we find that onboarding a particular e-commerce platform in a foreign country is a huge challenge. So, for example, Indian MSMEs who are working on Amazon, Amazon can onboard them for UAE or the US where they are present. But if we have to do something in Africa, for example, and we have to access a local e-commerce platform, that onboarding is a challenge. So I hope this group can make some recommendations and facilitate this.
No, definitely. I think that is a very, very pertinent issue. And I'm sure that ONDC is here, they are listening to you, and Director from ITC is listening to you. So definitely that is the kind of thing which we need to facilitate and take forward. So, ladies and gentlemen, thank you so much for listening to us. I would apologize to my fellow panelists if I could not give them ample time to elaborate on their issues, and same apologies to the audience if we could not give you more questions to ask. But in fact, for me and for my team, it was really an excellent opportunity that we got here, and I thank DA Secretary Mr. Ajay Seth and the DA team for giving this opportunity. And definitely these issues will be discussed in detail in different forums later on too. And I really hope that we are able to come out with a very successful help desk which really fulfills our call for action, Jaipur call for action, as it was decided in the Leaders Summit. Thank you so much.
Thank you very much to all the esteemed speakers for the insightful discussions. Request our speakers to kindly take seat in the front row while we prepare for the next session. Thank you.
Unmute कर दिया mic. रुक जाइए. हो गया.
Requesting everyone to please be seated. Our next panel discussion addresses the topic of preparing for the future of work. May I now request Secretary, Ministry of Skill Development and Entrepreneurship to kindly join us on stage as a moderator for this session. Mr. Atul Kumar Tiwari, Secretary, Ministry of Skill Development and Entrepreneurship, is an officer of the Indian Administrative Service. He has handled different portfolios in the state of Karnataka, particularly in industries and commerce, urban infrastructure development, and education, with many accomplishments to his name. In the Government of India, he has served with distinction in ministries of urban development, overseas Indian affairs, rural development, textiles, information and broadcasting. He served as Additional Secretary and Special Secretary in the Ministry of Skill Development and Entrepreneurship. May I now welcome on stage our esteemed panelists for this session as I take their names. Please welcome Mr. Mark Keys, Head of Skills and Employment, Head of Skills OECD, who will be joining us virtually today. Mr. Srinivas B. Reddy, Chief of Skills, ILO, who will be joining us virtually today. Dr. Sabnam Singh, Principal Advisor, Healthcare CII. Mr. Hiranmaya Pandya, President, Bharatiya Mazdoor Sangh. Thank you all for joining us. I now request to Secretary, Ministry of Skill Development and Entrepreneurship to give his opening remarks and take forward the panel discussion. Over to you, sir.
Good afternoon. Secretaries DA Sri Ajay Sethji, Sri Dr. V. Ananthan Nageshwaran, CESR, distinguished guests and colleagues. The Ministry of Skill Development and Entrepreneurship was implicated in 2 working groups. We were there working with the working group on education, where we did something on future of work along with education. And we were also on the working group on employment, where we worked with the Ministry of Labour and Employment. And if you see the New Delhi Leaders Declaration, there, the future of work has been given in the paragraph 20, and there are 9 elements, out of which 4 are dealing with the future of work and the skill gap. As we all know that the world of work has gone and is undergoing profound changes because of technological advancements, demographic shifts, and the green transition. So what we consider as a skill now are very quickly are getting outdated, and there is a need for us to reskill as a result. There is always a probability which has increased over times of skill mismatch, and these have a far-reaching impact on the economic growth, employment rates, social stability, and our overall competitiveness. The area which we are talking about, which is skilling and it allows for the movement of the people across the international borders, is also implicated very strongly along with the immigration policies and such other things. But even then, as the countries age differently, developed countries young people are getting less, And there are certain areas, because of technological shifts and climate change, some skill sets are required. So there was in the G20 overall unanimity on the urgency to map existing and anticipated skill gaps and the need for timely skilling, reskilling, and upskilling. And I would say that the G20 Employment Working Group and Labour and the members there, they work tirelessly on bringing the unanimity on how do we narrow the skill gaps through very targeted measures. And the outcomes which have come, which is about the accurate skill gap analysis, strengthened domestic statistical resources, expanded use of key databases, especially the ILO and OECD skills for job databases. And the basic idea is that we should provide more skilled and adaptable workforce within the G20 community. So I would say that this initiative, which has been taken by the G20 Working Group on Employment, has the capacity to transform the global labor landscape, and it will work, if worked properly, it will lead to alignment and consistency throughout the International Skill Classification Framework. Although it looks very abstruse and technical, but on a commonsensical term, what is the people we require in what jobs, roles in different countries, and how do we map the data, and how do we equip our domestic workers for those skillings so that there is a greater interplay, flow of skilled workforce across the international borders. And when we're talking about the G20 Education Working Group, we're talking about the artificial intelligence, and we find that only 21 to 25% of the workers have the high literacy skills to outform the artificial intelligence today. So one can imagine that how this would impact on the global workforce in the future, and how necessary it is for us to upskill our systems, upskill our people, and create our systems all over the world. As our Honorable Prime Minister has stated that India can become the world's largest provider of a skilled workforce for the world, and this vision also underscores the need for continuous adaptation and progress. And he has also called on many occasions that we need to constantly update our training programs and syllabi to ensure that our youth are exposed to the latest technology and industry environment. And this is the forward-looking perspective which is essential in a world where the change is the only constant. So we have a very esteemed panelists from different parts of the sector, and we look forward to them for offering their perspectives and so that we can engage in a robust exchange of ideas. We have Mr. Mark Keys. Can you see him? Mark Keys is there. Hi, Mark. He is the head of the Skills and Employability Division of the Directorate for Employment, Labour and Social Affairs of the OECD. He is responsible for the OECD's work on employment and skill development policies to promote a more inclusive and resilient labour market. He is also in charge of the OECD's Future of Work initiative and also contributes to G20 work on employment issues. He has published works include articles on labour market in transition countries, earning inequality, minimum wages, future of work, and aging and employment policies. Welcome, Mark, for joining us for the discussion today. We have Srinivas B. Reddy. He is the Chief of Skills and Employability Branch in ILO Geneva since January 2018. He joined the ILO in 2000, and prior to taking up his position there, he was Country Director of ILO office in Bangladesh from 2013 to 2017. He has previously been a senior advisor on technical and vocational education and training and skill development specialist, and has worked in ILO field offices in India, Indonesia, and Bangladesh. Sri Hiranmaya Pandyaji, he is a thought leader and has been at the forefront of the labor movement in the last 40 years. Currently, he holds the post of president in Bharatiya Mazdoor Sangh, which is India's largest trade union, and the chairman for Labour 20 under India's G20 presidency. He is a member of the Central Board of Trustees of EPFO and chairman of the Datopan Thengadi Foundation. He is the vice chairman of the National Safety Council and is part of the board of directors of the MSME and National Productivity Council. Welcome to Mr. Pandya and Mr. Reddy. Dr. Shabnam Singh is the advisor of CII National Healthcare Council and governing board member of Health Sector Skill Council and Life Science Sector Skill Council. She was also the founder chair of the Health Management Program at the Max Institute of Healthcare Management, Indian School of Business. She is an alumnus of Lady Hardinge Medical College, Delhi, and has 4 decades of rich experience in healthcare spanning across roles such as practicing clinicians and administrator. So in the spirit of this collaboration, we would like to embark on this journey of addressing global skill gaps and preparing for the future of work. And I thank all of the panelists and the esteemed guests here for joining us. I will start, when I go there, with some questions which will further elucidate the different aspects of what we are trying to do and how we can go ahead and do it. So I'll sit there and ask questions.
Thank you very much, sir.
Speak here. So my first question is to Mark. Are you able to hear me?
Yes, perfectly.
We cannot hear you.
Can you hear me now? Can you hear me now?
How do you think that the basic and extended indicators would help identify skill gaps as well as occupational shortages in various sectors across G20 countries? Mark?
So, can you hear me now? Are you able to hear me? Yes? I think there's a problem with the sound.
Yeah, you're audible, please.
You can hear me now, Chair? Oh, okay, good, perfect. All right, well, first of all, it's a pleasure for me to be here. I've been following the G20 work on the employment track very closely under India's presidency of the G20, and very much welcome the commitments that both G20 labor ministers and leaders have taken to tackle global skill gaps. And I would just like to congratulate the Indian presidency for these very successful and concrete outcomes. Now, when it comes to sort of the list of indicators that were put forward and adopted by G20 leaders and labor ministers, I think it's important to realize that the first level of indicators and this set that was identified are really important to set the context regarding skill demands and skill supplies. So they really give a broad picture of the state of the economy and where skill demands are lagging or leading skill supply and the extent of skills mismatch. Now, these indicators are based on data regularly collected through labor force surveys and so already available for most G20 countries. Now, let me give an example of how these indicators can be used. So imagine that employment is growing faster for nurses than the economy-wide average, and that wages for nurses are also growing at above average rates. This would suggest that the demand for nurses is outstripping their supply, and effectively there is a shortage of nurses. And of course, in the opposite case, we would see a surplus in an occupation if employment is growing slower than average and wages are growing slower than average in that occupation. Now, this is essentially the way that occupations in shortage or in surplus are actually identified in the OECD and ILO skills for jobs databases. But this is actually a rather indirect way to identify skill gaps, and therefore an extended set of indicators have been put forward. Now, these indicators can be obtained more directly through additional questions in labour force surveys and other household surveys, as well as in employer surveys. They can also provide information directly at the level of skills rather than passing through proxy measures of skills such as occupations and qualifications. For example, household surveys that ask about tasks performed at work can be used to assess skill requirements in jobs. This is the case for the OECD survey of adult skills, the so-called PIAC survey. Indeed, in this survey, we can obtain not only information through testing on certain skills that workers possess, but also on whether these skills are used intensively or not at work. We found, for instance, that reading and writing skills tend to be used more intensively at work in the United States than in Japan relative to the actual proficiency of workers in these skills. We have also demonstrated that employer surveys can be leveraged to investigate the extent of skills mismatch, skill gaps, and skill shortages. At the OECD, we have developed a very short module to be added to employer surveys to gather this information. The questions have been validated by experts and are being piloted in 5 European countries through the Continuing Vocational Training Survey. So with our colleagues at the ILO, we really stand ready to support countries who wish to collect this information through incorporating special modules of questions on skills into both household or employer surveys. Thank you.
The skills for job database, would we be able to predict these shortages and how we can enhance the efficacy of this database?
Thank you very much for the question. So, as mentioned previously, the Skills for Jobs database measures skill shortages. I think there's an echo. If everybody could switch off their microphone. Okay, I think that's better. So the Skills for Jobs database measures skill shortages based on labour market signals, such as occupation-specific data on wage pressures, increases in hours worked, underqualification, employment growth, and unemployment. So this actually sets shortages apart from reports of recruitment difficulties that could be due to poor working conditions and low attractiveness of certain jobs. For example, we can ask employers, are they struggling to find people in certain occupations? And often the answer can be yes, but we don't know, is this a real skills shortage? Or is it just because they're paying not the going rate of wages, for example, and therefore, of course, are facing recruitment difficulties? Now, our data actually points to pronounced shortages in the medical and personal care professions, as well as teachers in the vast majority of countries for which we have data. Now, these shortages of high-skilled workers are also accompanied by shortages in some more low-skilled jobs, such as personal services jobs, such as for waiters, jobs in tourism, cooks, cashiers. Now, one of the strengths of our Skills for Jobs database is that we can translate shortages and surpluses in occupations into the corresponding gaps at the level of the skills required in these occupations. This not only helps to identify the specific training that may be required in the case of shortages to obtain these skills, but also where there are common sets of skill shortages across occupations that should be the focus of training initiatives. For instance, demand seems to be higher than supply in many countries in high-level cognitive skills, such as learning to learn skills, as well as scientific knowledge. Our data also helps to dispel the widespread belief that social skills, self-management skills, communication skills, and digital skills are in substantial and widespread shortage. Now, while digital skill requirements have spread to almost all occupations, in fact, the supply of these skills has also increased. Consequently, according to our data, shortages in IT skills have actually declined significantly over time. And it's only some digital skills, notably content creation and computer programming, that are currently in shortage. The picture also varies from one country to another, whereas 10 years ago, there were widespread shortages in most countries across all IT skills. Now, it's also important to note that occupational shortages are quite consistent across countries. For example, in our recent study on shortages in the healthcare sector, jointly with the ILO, this shows that in nearly all of the countries included in the Skills for Job database, there are shortages in this area. This means that it's going to be difficult to address these skill shortages through migration. And in fact, migration of health professionals may even exacerbate the situation in the countries of origin. Now, of course, we can do better. And besides increasing country coverage, which is the most important aspect, there are other aspects of the Skills for Job database that we can improve. For OECD countries, we've already incorporated skill requirements coming from online job vacancies, for instance. This makes the information more timely. And in addition, because we know that skill needs are changing over time, and that skills shortages are not just coming from changes in occupational shortages, but also because of changing skill needs within occupations. And so it would be useful to consider this extension for all countries where data is available. Now, to conclude, for the information included in the Skills for Jobs to be effective, it's not only important to collect this information, but it needs to feed into policy measures, such as education and training curricula, targeted training subsidies, career guidance, public employment services, and migration policies. So it's not sufficient to develop a good tool to monitor global skill gaps. This information must be used by the relevant actors if skill gaps are going to be tackled successfully. Thank you.
Moving forward, I will turn to Dr. Sabnam Singh. Ma'am, how would the identification of skill gaps would help Indian youth to avail employment opportunities both domestically as well as overseas? And how do you think that the framework for designing and introducing digital upskilling and reskilling programs should be developed and could be adapted for different set of workers and their segments?
At the outset, thank you, sir. At the outset, I would like to thank you for inviting us from CII to share our thoughts, and congratulations to everybody, the country under the leadership of the Honorable Prime Minister, for getting us all to this very, very important, pivotal moment of India. And I say this from the sector that I represent, that is healthcare. It is indeed a pivotal moment that we are being recognized as being able to support the rest of the world in a very, very important part, and that is health. If you are not healthy, if your workforce is not healthy, the entire ripple effect of productivity, inclusion, and general well-being doesn't happen. So I just wanted to share that this is truly a blessed moment. To your points as to the need from a learner's perspective, because at the end of the day, we owe it to our citizenry, especially our youth, to give them the opportunity to be at the right place, invest in their future, and thereby bring them into the global scheme of things. And here's where our experience is, that if you do not have the requisite, and I think Mark said it very well, if the right set of questions are not asked, you end up training people for a job which is not there tomorrow. So आज तो आपने IIT शुरू कर दी with a particular focus. When they come out into the labor market, the jobs are no longer there. So it's extremely, extremely important to focus on how you do those studies. And for 10 years, we have been doing this from the Health Sector and Life Sciences Sector Skill Council to identify these areas. And very importantly, for the young learner, they want the ability to decide for themselves after they experience it. So today, a particular child might say, I want to go into healthcare, but tomorrow when they realize they have to deal with urine and stool, they decide this is not the place for them. So though there's that gap, you've brought them into the system, harness them, but they don't end up. So there has to be a system by which not only identification takes place, but there's enough elbow room for lateral movement so they are not lost just because they have been trained or skilled in a particular place, but that applicability to other areas of employability are also taken into care.
Thank you, ma'am. And you are hitting the right buttons, I would say. And this is the challenge which we have to design in our skilling system. I would turn to Mr. Srinivas Reddy. Mr. Reddy, we have been talking about the global skill gap, and first important thing is how do we classify the occupations. So I would like to know from you what are the key elements and features of the proposed international reference classification framework for occupations, and how does the ILO, along with the OECD, you propose to pilot in select sectors?
Thank you very much, sir. Can you hear me?
Yes, we can.
Thank you. Thank you very much. And let me first join Mark from the OECD to congratulate the Indian presidency of the G20 Government of India for having taken up the global skills, the whole issue of global skills mismatch and skills mapping very high on the agenda of the G20, and congratulate all the G20 members for having made this to the G20 labor ministers and leaders declaration. This is very well recognized, and it's an excellent achievement, and I really want to thank the Government of India and congratulate the Government of India for having achieved this. To take up the question of the reference frameworks, ILO has long recognized the importance of an internationally harmonized approach to occupational classifications. So the International Standard Classification of Occupations, ISCO, developed by the ILO, has been the major instrument to harmonize data on occupations across countries. However, there is a limitation to this existing framework. The discussion on skills gaps require much more detailed insights and analysis than a simple list of occupations. So the key policy questions before us for our constituents are not only about what will be the jobs of the future, but also about what skills will they require. And to answer this critical question, we need a common framework, not only on occupations, but also on skills and qualification requirements. So the establishment of such an international reference framework is an ambitious work. Much depends, of course, on the level of commitment of the G20 countries to begin with. And first, the feasibility of such a framework need to be carefully examined before going into detail. However, let me share a few initial thoughts on the core characteristics of this framework. The first characteristic is global relevance. We need to develop a framework that does not serve one region or one industry, but it needs to take into account the relevance across regions, countries, and industries. Secondly, synergy with national systems. This is so important. The design should facilitate alignment and comparability with the existing national frameworks. The new international framework is not about replacement, but it is about enhancing and collaborating. Thirdly, adaptable design. This framework need to be designed to evolve and grow in a timely manner. Innovative approach such as use of big data combined with industry experts validation, therefore need to be explored and accommodated. And lastly, holistic understanding. Instead of a mere listing of job roles, the new framework need to take into account a comprehensive approach to encompass tasks, skills, and associated qualification requirements, giving a full picture of each occupation. Such a holistic understanding would allow detailed analysis of skills mismatches and support workers and enterprises in the fast-changing world of work. Taking into account of these design elements, ILO, together with the OECD, is proposing to conduct a feasibility study on the International Reference Classification Framework. If the outcome of this feasibility is positive, we plan to pilot. Our plan for piloting should take a focused, collaborative, and step-by-step approach. The pilot may focus on a few sectors to begin with. A strong demand has already been expressed by a number of sectors such as green hydrogen sector, where there is a huge potential for facilitating the transition to greener economy, but there is also a huge skill shortage. Again, the care sector is another sector where we have learned important lessons during the pandemic. So throughout this process, we will actively seek guidance from the G20 member countries and of course, Government of India, which has shown the leadership to make continuous improvements. So this proposed international reference classification framework will have to be obviously a collective effort to unpack the complexity of skills gaps and address these challenges. So with the guidance of the G20 members and the support, ILO and OECD, we stand ready to support the process.
One related question, Reddy Garu, is that we already have the reference frameworks, right? We have the ISCO, we have the ESCO, and ONET. So how will these contribute to the international reference classification framework for G20 nations? Just a brief idea on that.
Thank you very much. And this is a very good, important question. So in the past decade or so, there has been a surge in efforts to develop reference frameworks on occupations and skills. In the G20 member states and observer countries like Australia, Canada, EU, Singapore, Saudi Arabia, and UK and US have developed their own national and regional frameworks. Among these, ONET from the United States and ISCO from the European Union are two of the most important prominent examples. In fact, many of the national frameworks have adopted methodologies of these two examples. So ESCO of the European Union offers a regional classification frameworks across EU member states with information on as many as 3,000 occupations with 14,000 distinct skills mapped. ONET, developed by the US Bureau of Labor Statistics, provides a rich database of information for over 1,000 occupations with a set of 35 skills mapped. Now, how do these frameworks provide inspiration for an international reference classification framework for G20? The key is to learn from the data and methodologies that these two examples have developed over the years. By combining the nuanced analysis on skills intensity from ONET, the detailed granularity of ISCO, and the internationally recognized categorization of occupations from ISCO, the ILO, we may be able to explore the way to construct a framework that is both adaptable and robust across diverse economies within G20 and beyond. It is also worth noting that there are several examples of countries like Indonesia, Uruguay, and Vietnam adopting ONET to their own country-specific context. These examples demonstrate the flexibility of ONET and the value of localized contextualization. So, to answer your question, by exploring the ways in which the existing structures can be harmonized and adapted to different contexts, we have the opportunity to create a framework that not only reflects the labor demands in each country, but is also comparable across G20 countries and beyond.
Thank you very much. So we have so far looked about the global skill gap and referencing, etc. So now turning back to you, Dr. Singh, how do you think this global skill mapping and international referencing, after all, will facilitate skill-based migration pathways? And what will be the challenges there, and how can this thing be developed based upon your suggestions?
Thank you, sir. So once there is, I think the most important and key to any, what we found across all sectors, whether it's healthcare, IT, manufacturing, each one of them, the portability aspect is extremely critical. I remember years ago we worked with ILO on the possibility of circular migration for skilled workers, keeping in mind that whenever there is a need, any kind of equivalence is put aside to address the need. And thereby, the skilled migrant worker goes to from the destination to the origin country to the destination country for a defined period in time, and then comes back. So for the harmonization to take place, as well as to be implemented, it is extremely critical that a baseline platform will be required. So when you're harmonizing the references, the different countries, we always look at ranges in medicine. You start with a minimum and you go to a maximum. So there should be unanimity in the area of the baseline. You can go to the maximum to whatever you want as far as portability of skill certification is there. But at least that bit has to be, it should be kosher as far as everybody is concerned. The other thing is the recognition of the registries. Actually, that becomes a very critical part. Every country has and should have the right set of registries which are then recognized by the sovereign. As far as learners are concerned, as far as job seekers are concerned, that is extremely critical. If the sovereign does not recognize that particular bit, it immediately impacts migration. Though not relevant to the conversation that we're having here just now, a critical component of migration is safety and societal influences. So maybe we can talk about that later, but for the purpose as of now, portability, recognition is extremely important.
Thank you, ma'am. Let me turn to Mr. Pandey. Coming from your vast experience of working with the trade unions, how do you think that the global skill gaps we can contribute, addressing the global skill gaps will lead to sustainable and inclusive future of work?
Thank you, sir. Thank you very much. Good evening to you all. I was eagerly waiting for my turn to come. At last, you saw on my face. Thank you very much, sir. Thanks to the organizer for providing us an opportunity to share our views from our organizer's point of view. Definitely, it's very related questions for all of us, particularly to the large workforce of our country. What we keep in mind also, the data available, that the 55 crores of workforce is available in the country, and we have to see for that also. At presently, we can talk about this total work and workforce is divided. Majority we can divide it into the unskilled, semi-skilled, skilled, and highly skilled. But I think we would like to go further for the professional skills too. So this way we have to definitely fill up these gaps and which is most required. Now when we talk about the future of work, definitely we should think of that the future of us being human-centric, and that is what we can achieve for that. At least advance of technology and entrepreneurship is a must. Technological changes is also going on day by day. But all this technology is in the hands of the humans. That we have to keep in mind, and that is a robots or technology, whatever it is coming, mechanical work all, but ultimately it's creative thinking from the human-centric also. for which we also require some data also. So kudos to the government of India. They have created the e-Shram portal, and to my mind, what data available is more than 29 crores have been registered for this among the workforce, basically from all that advanced skill. So for these also we required either reskilling or upskilling. Definitely from one stage to another, maybe from unskilled to semi to skilled, or skilled to the highly skilled even. But there is a need to train these persons in these skills even also. That way it's a relevant experience we have to get for the future of work. Not only that, but digitization is taking place also, and it has already taken place. So the world is also struggling with youth unemployment also, not only in the country, but that is what is in the time both even also taking may cause in uninterest here. If the skill gaps are mapped and probably adequate training, skilling done, I think the productivity will definitely increase, growth will also come up, development also prospects boosted. There is a definite need to ensure grading of the economy, but there are very few people with green, sustainable like skills at this to be met for the future of the work. Like in a simple and a very examples also, earlier we were manufacturing the pencils, people were working with the pencil industries, but today the pencil is out of the use because everyone has a mobile in their pocket and everything. So we need to reskilling up all this workforce, and we can survive with also they had a knowledge. I just summing up with the last word also, the qualification is required, education is required, every knowledge is also required, but everyone has their own skills, and that skill can further growth and more. Thank you, sir.
Yeah, one more related question. We are talking about the skill gaps and how do we upskill them and still recognize the old skills and all together. So from the society point of view, and as Dr. Singh was also saying, that we have to see the human part. So what do you think that is there a need for a social dialogue so that we effectively implement these key commitments for a better future of work? And what kind of things would you like to propose, which has a commitment from all different stakeholders in that sense?
True, sir. True, very true, and thank you very much for once again turning to me even also for the second consecutive questions. I think the social dialogue is a very important aspect, and it is a tripartite mechanism is to be developed. Of course, in India, we have the tripartite mechanism too also, as being I am also the member for the EPFO board even also, which is a tripartite. Even also I have attended so many ILC, the conferences of ILO, Reddy Saab is also with us also, and 110, the ILC, which took place in June 2022 even also, where we had lots of dialogue on these even also, not only the issues, but also the skill up, skill training, apprenticeship training, and others area also, likewise OSH and others. So that is what. So we feel this is an important dialogue with both framing and implementation of government policies as well as schemes even also. When governments particularly formulate some scheme, so especially the beneficiaries would like to have the benefits out of them even also. Without the tripartite dialogue, the beneficiary does not take the benefit of those kind of schemes even also. So that is the necessary for all of us to this reach the included beneficiaries due to the discrepancies in our on-ground implementation mechanism. So that we need to develop some mechanism over here also. But the trade unions and huge role to play for these even also, especially with the kind of reach we have to for a last persons in the line with the inputs. We call it policy making or based on our own duty to say also. Those days have gone for the struggling much more hard. Now everything has to develop there also. So one thing in my introduction, it was called about we have developed the Topan Tengri Foundations, where we are taking up the analytical work, research work, and also the database operating also, knowledge skilling, knowledge sharing to all at the level, at the ground level also, And there we have to make what are the governance between the civil society organization and government will be the crucial developer for solutions for the global problems. One, just we had entering into the DWCP, that is Decent Work for the Future, DWCP program with the government. All the trade unions have entered into the agreement for 5 years, that is 2023 to 2027, with the help of the ILO, the Geneva, and the Delhi also. I think this will make much more beneficial to me. Thank you, sir.
Thank you. So I thank you, the fellow panelists. We have time for 2 questions. So anybody would like to ask questions? Yeah, please.
Great discussion. I'm Dr. Abhilasha Gaur from Electronic Sector Skill Council. I think some very useful insights, but I would like to know that how G20 nations will cooperate and support in creation of this framework for future of work with organizations like OECD or ILO. Few of the points were shared regarding international framework and employer survey, but if few more insights panelists can share, I think that will be great.
Yeah. Mr. Reddy, would you like to take this question?
Thank you, sir. Yeah, thank you for the very good question. The role of G20 in global skills mapping and skills gap is very, very important. In fact, efforts towards creation of an international reference classification for occupations by skills and occupations qualifications would actually require a deeper engagement from the G20 countries, without any doubt. Because these major economies hold valuable expertise and expertise in both the labor and skills development issues. However, the challenge lies in the fact that occupational classifications differ significantly across nations, leading to variations in job categories and descriptions. So to address this, G20 countries would benefit from closely collaborating, obviously among themselves and with technical and specialized agencies like ILO and OECD, to collect and distribute data. This is very important, data collection on agreed skills taxonomy at a global level, and to begin with at the G20 level is very, very important on the occupational skills and qualifications. So experts from these nations need to engage and exchange detailed technical information about the systems encompassing industry sectors, job descriptions, and comparability with other country systems. This sharing of information is vital for constructing a standardized framework. Similarly, the G20 nations also need to actively participate in discussions to explore the ways to align and standardize their national classification systems where feasible. This alignment is crucial to reduce discrepancies and integrate various national systems into the international framework. Sharing good practices, research findings, and methodologies is key to ensure that classification framework accurately represents the global workforce, current global workforce, and incorporates advanced approaches to accessing skills and qualifications. We are very happy that the G20 Indian presidency has really provided the leadership and momentum and impetus to this work. And we sincerely hope, both from the ILO and I'm sure Mark will also join me, that we, thank you, Mark, we stand ready to support the G20 nations. Obviously, we need also support from the G20 in terms of moving it forward. A closer collaboration with the G20 members will definitely take this forward. Thank you very much.
So Mark also shaking his head in appreciation. So both of you will have to work quite a lot along with the G20 countries to bring certain unanimity and the need to resolve these issues. We have time for another question, if anybody.
Hello, I am Sushma from CII. So my question is, are there any best practices or lessons learned from countries or regions that have already implemented similar international reference classification for occupations?
Yeah. Mark, would you like to take this question? They're talking about whether similar things have happened in the past and whether we can learn from those lessons.
Well, thank you very much for the great question. We know already that several countries and regions have implemented reference classifications for occupations by skills and qualifications. However, what we've seen in practice that they have their relative strengths and weaknesses. So my ILO colleague has already mentioned the well-known sort of cases of ONET in the United States and ESCO in Europe. Now, these have tremendous strengths in the sense that they have widespread coverage in terms of occupations and the skills used in those occupations, and they've been road tested across a range of countries and for different purposes. However, both of these classification systems are quite cumbersome to establish and maintain, and in particular, they are slow to adapt to new occupations and to changing skill requirements within occupations. Now, there's also been some interesting initiatives at the sectoral level, and we haven't spoken much about that. And one example is the International Initiative for Global Skills and Competency Framework for IT Professions. And this has been maintained and developed through international collaboration. And I think it's an interesting example of focusing on a specific sector. Another sectoral initiative is the one in France, where a national observatory for employment and occupations for the green economy has been established, and with the aim of identifying skill and training needs to facilitate and accompany the green transitions. Now, these sectoral initiatives are important, but of course they only cover one sector or slice of all occupations and their skill needs. The other key issue that I've already mentioned is it's not just important to establish these classifications, but we need collaboration in establishing them. Collaboration by governments, labor organizations, employers, and training institutions. So engaging all relevant parties in the construction of these classification systems can lead to a balanced and comprehensive approach, but also ensure that these classification systems are actually used and the information that they contain are used to inform recruitment and training decisions and the content of training. It also requires the collection of robust empirical evidence on the task performed at work and hence the skills and knowledge required in jobs together with expert opinion. And finally, I think that the other lesson that we've learned is that any international skills framework should be adaptable to the needs and specific contexts of different countries or regions while maintaining compatibility with international standards. So getting that balance right is important. Now, as my ILO colleague has mentioned, we have been tasked by the G20 under India's presidency with carrying out a feasibility study for developing such an international framework for skills. And of course, we will draw heavily on the lessons to be learned from the different international, national, and sectoral classification systems that are already in existence. And hopefully we can take from each of these different examples the strengths and avoid some of the weaknesses. But this is an ambitious target going forward. And of course, we count upon everybody's help, whether it's from the government, from training institutions, from employers, or from employee and worker representatives. So we count on your help. Thank you very much.
Thank you very much, Mark, for more or less summarizing what we are intending to do and how we can go about it. We are just nearing the end of the time, so I will just sum it up, try to sum it up. So we are entering into a very complex and pressing issue of addressing global skill gaps because of the factors which we have listed out. And during the G20 deliberations, there were certain things which have been talked about, and they make logically a lot of sense in a way that we have to standardize the basic indicators. Then we have to make use of the international reference classification framework. And as Dr. Reddy was saying and Mark was saying, it has to be applicable, general, relevant. Then based on that, we'll have a skills for job database to be ready. And by doing all that, we identify the skill gaps. And then when we do all that, then there will be a possibility and greater probability of having the skill-based migration pathways. And by doing all that, we'll be able to work around bridging the global skill gap. And as it was mentioned, it has to have some human element in that. We have to take into account the existing skills of the people which they already have. It has to be portable, as Dr. Sinha was saying. And as everybody points out, it requires a very collaborative spirit in which the governments, the industry, the people themselves, the social contract, all have to work together so that we realign all our skilling landscape in line with the changing requirement. And there is a language which develops so that we are able to move forward on doing a very measurable, monitorable steps so that the skill gaps are filled, and so that there is no economic backlash because of the lack of the skills of a skilled workforce in any part of the world. And I would say that in the end, that this is something very, very important that the G20 deliberations have brought in. And at the end, I would like to express my gratitude to our esteemed panelists, the people who have asked questions, and very, very thought-provoking discussion which we had today. It appears quite abstruse for people who are not inside this skilling area, but this is something which has not been tried at such a scale at the G20 level ever. And we are already in touch with the ILO and OECD, and they're working with us and the Ministry of Labor on the, I won't say baby steps, but major steps which we have to take forward in bridging these gaps. So with that, I would like to thank the panelists and the esteemed guests for listening to this discussion, and for the DA for organizing this webinar, where we could also reflect once again on this very, very pressing need for bridging the skill gaps. Thank you very much. Namaste.
Thank you very much to all the esteemed speakers for the stimulating discussions on a very pertinent topic of preparing for future of work. I thank everyone for your participation in this session. Request our speakers to kindly take seat in the front row while we prepare for the next panel discussion. Thank you. Requesting everyone to please be seated for the next panel discussion. Requesting everyone to please be seated. Welcome back to the third panel discussion on the topic Financial Inclusion and Productivity Gains Through Digital Public Infrastructure for Strong and Sustainable Growth, the Way Forward. To take forward the discussions, we have on stage Chief Economic Advisor, Ministry of Finance, who would be moderating the panel discussion. Dr. V. Anantha Nageswaran is the Chief Economic Advisor to the Government of India. Prior to this role, he has also taught at several business schools and institutes of management in India and in Singapore. He was the Dean of the IFMR Graduate School of Business and a distinguished visiting professor of economics at Kriya University. Dr. Nageswaran was a part-time member of the Economic Advisory Council to the Prime Minister of India from 2019 to 2021. In his corporate career spanning 17 years, from 1994 to 2011, he was with Union Bank of Switzerland, Credit Suisse, and Bank Julius Baer. May I now welcome on stage our panelists for this session as I take their names. Please welcome Mr. S. Raman, Chairman and Managing Director, SSBIG. Mr. Rajesh Bansal, Chief Executive Officer, RBI Innovation Hub. Professor Sachin Chaturvedi, Director General, RIS. May I now request Chief Economic Advisor, Ministry of Finance, to give his opening remarks and take forward the panel discussion. Over to you, sir.
Thank you. I'm told that the public address system is working well without echo, so that's good. So I think those of you who are standing outside, I think are probably going to miss a very good session. So please come back in. Secretary Economic Affairs, Secretary Commerce who's had to leave, Secretary Ministry of Skill Development and Entrepreneurship, he also had to leave after the previous panel session, but thanks to both of them for conducting their respective panels. Mr. Raman, Chairman SSBIG, Sri Rajesh Bansal, CEO RB Innovation Hub, and Professor Sachin Chaturvedi, DG RIS, distinguished guests and colleagues. It's a pleasure to moderate this panel discussion on financial inclusion. In a way, the previous two sessions on this are quite linked because we talked about the importance of trade for growth and the future of work, and digital public infrastructure and financial inclusion are going to be important for integrating MSMEs into the manufacturing and trade aspects of the economy, and as well as making sure that the working class benefit from technological innovation rather than being supplanted by technology. So in that sense, the three themes chosen for this sustainable seminar on sustainable, strong, balanced and inclusive growth are naturally quite well integrated, and it is good that we bring this topic of financial inclusion and digital public infrastructure as the last seminar, as the last panel discussion to round up the previous two panel discussions and integrate them as well. You know, under its presidency, India introduced into the G20 discourse the digital public infrastructure approach for advancing both financial inclusion and productivity gains, and that is where the previous two panels come into play. It is not just about financial inclusion, but also about productivity gains. The G20 leaders endorsed the first of its kind policy recommendation for advancing financial inclusion and productivity gains through digital public infrastructure, and acknowledge the pivotal role that DPI plays in promoting financial inclusion, inclusive growth, and sustainable development. The continuity of the DPI narrative in the G20 discourse in future presidencies has been ensured as the new G20 2023 Financial Inclusion Action Plan, FIAP, for the next 3 years recognizes DPI as a crucial component of the digital infrastructure that will be promoted for achieving universal financial inclusion. The DPI approach has the potential to complement ongoing efforts in all countries to accelerate financial inclusion and achieve strong and balanced growth in the process. Be it for expanding access, improving usage, or delivering high-quality financial products and services to the last mile, the DPI approach effectively enhances the quality and the speed of financial inclusion in many countries, including in advanced countries. From the discussions and events held on this topic in the last 10 months, we have understood that there is a very keen interest globally especially in the global south, to learn more about the transformative approach that digital public infrastructure has facilitated, particularly in India and in several other countries as well. Our focus, therefore, going forward, is on finding ways to foster a customizable adoption of this approach in countries as per their own circumstances and needs. For example, the latest World Bank Findex 2021 report observes that the lack of verifiable identity is one of the main reasons for adults to remain excluded from financial services. And also, interoperability of systems and the availability of low-cost switch for financial transactions are equally important for taking the digital financial services to all segments of the population. These kinds of issues will crop up in many countries, and therefore solutions adopted in one place can be applied elsewhere as well. To discuss these issues and others, we will engage in a stimulating panel discussion, and I mean it because most of the time the panel discussion happens among people here, and those of you sitting there are feeling like you are sort of unattached bystanders. But we want to make that a little bit more interactive and lively. So I have with me three very good panelists to take on the subject of financial inclusion and digital public infrastructure, the role it plays, etc. Mr. Raman, Chairman, Small Industries Development Bank of India; Shri Rajesh Bansal, Chief Executive Officer, RBI Innovation Hub; Professor Sachin Chaturvedi, Director General, RIS. I will take it that you have read their bios included as part of the seminar brochure. Therefore, I'm going to save some time by not reading out their respective bios, which I can assure you is very well distinguished for all three of them. So I have some initial questions to pose to them, but they are more than welcome to expand on these questions. And just as we don't penalize students who finish their question paper earlier than the stipulated time, we won't be penalizing them if they don't take up their full 10 minutes. Instead, we will be rewarding them with more questions, and you could do that as well. So my first question, of course, goes to Mr. Raman. In general, we all know that MSMEs face significant financing gaps, and it's estimated variously to be around $5 trillion or more. But given your experience in dealing with MSME financing issues in SSBIG, what are the innovative approaches that DPI can facilitate to address the challenge and also enable the MSMEs to grow? And in fact, this question, which I will pose to the other panelists as well, and I would also leave that with you. MSMEs are not just suffering from financing gap, they're also a skill gap. And to what extent, based on your understanding of the MSME landscape in India, how can digital public infrastructure can also address the skill gaps among MSME entrepreneurs? These are my two questions for you. Floor is yours.
Thank you so much. I thank the DA for inviting me here to this very august panel. Let me dive straight into the fact that DPI, being an active user at SSBIG, it's a no-brainer that it's going forward in the next 3-year session with the subsequent G20 presidencies. So the identity layer, the payment layer are already very well established. I think I was reading a statistic somewhere that we have a 76% penetration of the QR code amongst MSMEs in the country. Obviously, this is from a sample that was done, but it is extremely impressive. The credit layer is now the third layer that we are trying to bring and therefore exploit DPI. And this is happening essentially for the reason that as lenders, and let me just preface that for a moment with what does the MSME landscape look like? So it is somewhere around 8 crore entities, so we're saying 80 million entities, of which about 1.5 to 2 crore might be GST registered. So you have this very long tail of about 6 crore entities, which are what we call as informal entities. They would certainly have got loans. So the numbers that we have estimated is probably 4 crore plus would have got loans from SHGs and MFIs, that is microfinance institutions. So they are not unaware of finance, they are fully aware of what it is to take a loan and repay it, and they're conscious, very conscious of the high cost of those loans typically, which come from the MFI segment. But nevertheless, it is access to credit, and therefore it overrides the price of credit. But getting back to what we are doing, and therefore the two segments have to be dealt with differently. We have different instruments for each, and the easy one, of course, is the GST registered entities, wherein directly taking from the DPI or the India stack, we are really saying that we've triangulated the GST data coming from the GSTN. We've got the income tax data coming from the income tax database. We have bank statements coming from the account aggregator. And therefore, we are pulling with, right now, the help of an OTP, but once account aggregator also brings in the GSTN data in a more meaningful way, and that's work in progress. We're actually looking at account aggregator and ITR data coming seamlessly to a lender, and based upon which we're taking credit decisions. So as all of you would know, it's the asymmetry of data that really comes in between the lender and the borrower, and therefore, risk pricing sort of goes up through the roof. But we are consciously looking at SIDBI is pricing its loans today at the most competitive peg that you can expect in the market, because we have analyzed that entity's business health, its financial health, and actually matched bank account entries with GST invoices. And this is really where the power of the fintechs have come in. They have, to a large extent, mastered this. We also have a deep dive into GST data, which gets into compliance, which gets into counterparty concentration. So what I'm basically saying is that the essential data and more, which a lender would need to be able to price the risk of his borrower, is there. We have already started, and now we're talking about the MSME sector. The sweet spot is roughly 1 crore, between 1 and 2 crores. That's the kind of ticket size that they would like in this GST registered segment. And therefore, we already have a product. We call it as, sort of unimaginatively an express loan. And it is a product that, by getting these data points, it is fully automated. There is no human intervention. So if you cross the BRE, that is the business rule engine, on these 4 points of GST, a triangulated score which is called FitRank, which has been created by one of the credit bureaus along with a company called OPL.
Wrap up your remarks?
Sorry?
Do you wrap up? So we can move on to. Could you wrap up your remarks?
Sure. I will absolutely do that. So I'm sorry I've got into the granular of the whole thing.
Yeah.
But the whole point is that we today are giving loans on an automated basis, and end-to-end it is digitized, including the documentation. So, that is really the power of DPI, which I just wanted to expound upon. Thanks.
Thank you, Mr. Raman. I think it's some of the points you mentioned are very exciting. 76% penetration of QR code among MSMEs, triangulating GST, income tax, and bank statements to facilitate credit flow to MSMEs. Before I turn to my next panelist, as I said, I want to make it more interactive. Just also to make sure that you have been following his remarks. Do any of you have a question for Mr. Raman straight away? Okay.
Thank you, sir. I must compliment you. And this is what we are actually practicing at the grassroots level, where without taking any forms, now a credit limit is being renewed or sanctioned. But I have a small point, I think, which would be of crucial importance to MSMEs. So the credit delivery which comes from the banking sector is either for working capital or for term loans. What is seriously missing is there is no money given for R&D or for marketing. Now, larger companies, they have larger equity base, they can go to the public market, and they can use that money for R&D and for marketing. Now, if you are giving 2 crores or 5 crores, but you don't give money for marketing and R&D, you are actually putting a serious question mark on that 2 crores also. So I would request your views on that. Thank you.
Go ahead.
So I'll just quickly react. One is that marketing is really about using your working capital well. So I think, most banks end up giving something called business loans, which are multi-purpose. So it's not really stuck or, hinged to the end use. So I think there is that traction is already available to the MSMEs. But R&D is a totally different point. I completely accept that issue, and it's something which we are trying to cover with venture debt, because R&D typically happens in the early stages of a small company. Once companies grow to a particular maturity, they have enough sort of retained earnings to be able to put that into use as R&D. But we are cognizant of the problem, and we are coming up, at least in the startup ecosystem, we've already created something called venture debt, and the government's already come out with a guarantee product for venture debt. So that has already happened.
Thank you, Mr. Raman. I think we'll now move on to Mr. Rajesh Bansal. I'll come to you for the final set of remarks. Mr. Bansal, you are the CEO of the Innovation Hub, which is actually a development-oriented approach, but you're also part of the Reserve Bank of India, which has got a more of a regulatory role. You have already have 2 questions which have been given to you, but there's going to be an out-of-syllabus question also, which is that how do you see the regulator balancing these 2 roles as well? One is the regulatory role, but given the immense potential of DPI, you also have to make sure that we don't impede the innovation aspects of it. So how do we balance the 2? This is apart from the other 2 questions that you have already been given. Thank you.
So some of you might not be aware, Reserve Bank Innovation Hub was set up 2 years ago with the specific objective, as CEA said, the fact that Reserve Bank being a regulator, it cannot really be market facing to the extent and engage with the market stakeholders like fintechs and banks. And that is precisely the reason the first central bank in the country, it created a Reserve Bank Innovation Hub as an independent company, Section 8 company, not-for-profit company, chaired by a non-RBI. Mr. Krish Gopalakrishnan is the chair. And that is the specific purpose. I'm hesitating on answering the first one. 2 of my RBI board members are sitting here. But to be honest, we as RBI, we do not do regulation. But being Reserve Bank Innovation Hub, we act as the listening post of the RBI for proactive policy and regulation. Because sometimes, or actually most of the times, I've served at the RBI for 20 plus years, the language which fintech especially speak is seldom understood by the RBI, because the language which RBI speaks, I used to speak, is a different language. So you also add as a listening post and give active feedback to RBI on what is the industry saying, what does the industry want. So kind of we play that orchestrator role and the listening post role.
Okay, then if that is the case, what are the kind of specific examples in which your role as a listening post has facilitated a good dialogue between the regulator and the regulated entities? Is there any example you can share with the audience?
Yeah, a specific example which has been, ever since I took charge as a founding CEO is KYC. I mean, every time you talk to the fintechs, not so banks, they always say that KYC is a challenge. So we have been working actively with RBI, especially on video KYC. What can be done to make video KYC seamless, frictionless, and potentially in the future agentless? I can get into details, but video KYC is a great regulation set up by RBI about 3 years ago. But large-scale implementation is still a challenge because certain regulation is RBI. So we are currently doing a proof of concept with UIDI to see how UIDI's face match algorithms becomes the default for the industry, something like the UIDI fingerprint has become the default in the country.
Okay. Thank you. So also, does the Innovation Hub play the role of doing regulatory sandboxes for the central bank?
No, because regulatory sandbox, so RBI does that,
But you
I can talk a bit whenever you get a chance about what we do.
Yeah. All right. Thank you very much. And now I turn to Professor Sachin Chaturvedi. The questions that we have posed to you earlier was, what are the areas in which we can deepen the role of digital innovations, including DPI, in taking financial inclusion to the next level? That was one question. And secondly, whether you had specific suggestions on initiatives that could be taken for capacity building for DPIs in such countries. But also, given the fact that the previous two panelists were very finance-centric, the question that I posed to both of them, I could actually seek your thoughts on how can DPI be harnessed for addressing MSME skill gaps as well. So, since you are Professor, we have given you 3 questions instead of 2 for others. Yeah.
Thank you. Thanks. I think first and foremost, the issue that is there before us is in terms of taking the Indian excellence forward to fellow developing countries. And just before the G20 Summit, Prime Minister hosted the Voice of Global South. And on 12th and 13th January. On 13th January, Prime Minister announced setting up of a Global South Center of Excellence. So taking Indian expertise forward to fellow developing countries. And incidentally, next week on 17th, there is second Voice of Global South Summit, where PM would inaugurate this center. And fortunately, the decision is to base it at RIS. So at my own institute, we are going to host this institute. And our idea is to partner with entities which are advancing several of our dialogues with partner countries. We have already got in touch with around 130 countries in the Global South, where demand for DPI, DPG, and similar dialogues, particularly related to MSME, agriculture, health, are there. And we are trying to shape it at 3 different levels. One, to bring in the think tanks, research institutions nominated by their governments to identify the demand and define the nuances of such cooperation. So that is number 1. Number 2 is to identify Indian entities that would provide that. So both on DPI and DPG, most of the government's willingness has come forward. The issue would be which Indian entity should do that, how do we deliver it, and in what way we make it an agenda that would be at the larger UN level. So G20 has given a mandate in terms of how we go forward and what are the major dimensions of it. As was mentioned, RBI Innovation Hub and also IDRBT in Hyderabad, they have been focusing on specific challenges of the Global South, which are also evident in India. Like, for instance, you may have a situation where there is no electricity, where there is no internet connectivity. What do you do in such situations? Mm-hmm. And this is something on which RBI asked IDRBT, IFTAS, and also RABBIT, all the 3 entities of RBI, to focus on technology development. And you would be glad to know the IDRBT in last 3 years has developed LORA technologies, which are long-range technological solutions for financial inclusion. And this specific dimension can provide you sort of micro ATMs which can function for 12 hours. They can store up to 12 lakh rupees in cash and can factor in 30,000 bank accounts in those machines. We just had one demonstration of this in the RBI board meeting. More, I think, work is required in terms of bringing in specific areas and state governments in our own country to take it forward. But this is something which has huge appeal for rest of the Global South, particularly in several of African countries. Of course, all African countries do not have similar challenges. Kenya and all are pretty advanced in financial inclusion. through digital technologies. But there are several countries where this is required. Even in South Asia, it would be quite popular. So I think if DPI, DPG related agenda from the finance track has to go forward as part of India's contribution to Global South, this is one area where I see a huge potential to come in. Second, there are several set of countries where MSME-specific dialogue has also got deepened. And particularly as India now is preparing for the India-Africa Forum Summit, IAFS, the task in terms of bringing in MSME, particularly micro-enterprises, that focus, and SHGs, FPOs, these are the three other modalities where we are trying to engage in. As of now, the digital solutions that have to come in, and I think your question to Mr. Manan was absolutely right, that what way we are going to do the capacity building. Because within RBI, we see several of the cooperative banks, several of the small private banks do not have the kind of wherewithals that are required. And as a result, time and again, several challenges keep on coming up. The situation is far more challenging for FPOs and for SHGs, which are working at the micro enterprise level. So if this has to be deepened further, we have to really take it much faster. Thank you.
Thank you. Thank you so much for a comprehensive discussion and presentation of some of the ideas you are working on. And I'm very happy to know that RIS is going to be the chosen entity to carry forward some of this work. And I'll come back to you to ask you more questions on the plans you have for engaging with the 130 countries on several areas. But before that, I turn to Mr. Raman. Mr. Raman, well before the G20 presidency started, we had a presentation earlier in a Ministry of Finance seminar. We understood that one of the Indian public sector banks, Indian Bank, I think had this MSME Prerna, some kind of a skill development program. And I understand that the National Stock Exchange also had a similar approach to training MSMEs. So banks, because they are in the forefront of providing finances, but we know that MSME entrepreneurs need additional skill set as well. Is there any thought on integrating the two, financing and skill, or is there something that should be looked at?
Sure. I mean, it's a natural corollary. So I think what we do, SSBIG as a bank, is really give loans and various other financial instruments to the MSMEs. But we also have a very large non-credit function, and that's really where the entire skilling and graduating them into entrepreneurship. So there are several programs that we run. In fact, there's a large team in SSBIG which we work with various partners. So, I mean, NSDC obviously is one of the partners, but we have a variety of partners across India where people who have the ability to work on the ground in that hyperlocal area, they come up with innovative proposals for skilling, and more important from our point of view, that skilling should hopefully lead to an enterprise creation. Now, obviously, there's going to be a sort of ratio which could differ around the country. So if I skill 100 people, you might end up getting 5 or 6 people, or maybe 20 people going ahead and actually setting up an enterprise. So it is slow, it is very expensive, because the skilling has to be done in the right manner. It has to be, you have to select the people well. You have to therefore work closely with the community on the ground. So there is a lot of requirement of, partner institutions knowing the people they're working with. But having said that, it is very important to take them forward and get them to become entrepreneurs. But then is really the difficult point that banks are unwilling to then lend to them because they don't have the requisite data. They don't have the requisite experience. They might be, so this is where we really are talking about those 6 crore informal entities for whom we have actually got now a digital footprint in the form of a Udyam registration certificate. Now, this is a program of the MSME ministry. We have partnered with the ministry to be able to drive a very large number of informal entities onto the platform. In the last 4 months, we've done nearly 1 crore additional entities so that they at least get a Udyam registration. Today, under the RBI, if you have an Udyam registration, a bank can classify that loan as a priority sector loan. So that is immediately a very big benefit, that even if a bank were to look at that, and what is also happening in the financial sector is that the NBFCs and MFIs, they are giving loans to those people and then selling those loans to banks. So in a way, there is a churn that's happening within the financial sector itself, where people who originate loans more easily, typically the NBFCs, they would mark those loans as priority sector loans and then further sort of securitize it, or, in terms of a direct assignment, whatever that way it is. So, we are generating the flow of credit to the informal sector is really the short point.
Okay. Audience, do you want to follow up on his remarks, please? The gentleman there.
My question is to the panel on when we try to advance the financial inclusion globally. Right now, we are talking mostly in context of India. In scenario where other countries are interested in Indian DPIs for the financial inclusion, they want the Indian DPIs, but they also want the financing for the same. So how that financing as well as skilling for the same, so how that to be tackled on, how that issue has to be tackled on? Maybe some of the panel can throw light on.
Directed to any one particular panel member, or?
It is to two, basically. One is to...
I was not sure exactly about the... What's the... Yeah. I think Mr. Yeah, Professor will take care of the question, I think. Yeah. Please go ahead.
Okay, so what I understood from your question is you wanted to know how this whole activity would be financed. So people are interested in partnering. They want to understand the financial inclusion technologies, but they probably may also need finance for this. So India's Development Cooperation Partnership Framework already has modalities for engaging on these fronts. There are two different modalities within which India is already supporting various initiatives within this category. One is, of course, the grant element. Wherever grants are required, India is providing direct monetary grant to several countries, Bhutan being the largest recipient of our assistance, but then there are many others. Mauritius is one. But then there are also lines of credit which we are providing to countries for financing this kind of partnership. The third modality which is coming up in a major way is the equity participation through entities that are coming up from MDBs, which are financing those kind of initiatives. So these three different modalities are there for equipping countries with new policy choices in financial inclusion.
Thank you, Sachin, for that elaboration. We can take one more question before I go back to asking my questions of the panelists. On the right? Yes, please. The two people on the right. Yeah.
Yeah, thanks a lot. I have a question for Mr. Raman. You mentioned 3 layers. One, the identity, the second, the payment, and the third, credit, which is work in progress. So I'm just wondering, the credit layer, whether it has provision of understanding the MSME's current debt situation as well. What I understood last is that because of privacy laws within the bank, the entity which is accumulating the loan cannot be disclosed to any other entity because of privacy reasons. So whether the aggregator would be in a position to identify bad actors, those who have probably defaulted or not servicing their loan, and trying to window shop other banking entities. So would it be possible to identify those bad actors? Thanks.
We will take the second question as well before he can respond to that one. Yeah.
Thank you, sir.
My question is that we are talking about financial inclusion. As we know that RBI regulated entities and other regulated entities, if you talk about SEBI or IDAI or PFRDA, everybody is participating in the financial inclusion. But why post office has been ignored? Post office, post office have a vast reach in our India. Through post office, if you talk about villages, so in villages nobody can have access to mutual funds. Why post office has not granted license for such kind of giving services in India? That's the question.
Okay, so
let me just, your point on the debt and the whole concept of the financial sector, or let me say the lending sector, having recourse to the same information database with regard to debts. Now, this has already been solved. So if you're aware that when it comes to individual loans, you have the credit bureaus. Now, those credit bureaus have also expanded and moved into the MSME sector. So on the large corporate side, you have the RBI database, which is available to all the banks, and the banks share their data on that. It's called CRIL-C. So that is available for all exposure above 5 crores. And therefore, that particular, set of loans which are lower than 5 crores have now come into what is known as the commercial side of the credit bureau. So all the credit bureaus today collect the data. We also have the information utility which collects data of financial debt. So that is another source which is a single point where all financial debt is today reported at the information utility. So I don't think we are suffering from an information asymmetry when it comes to the total indebtedness of any commercial entity.
Thank you.
I think on the post office component, absolutely brilliant idea. And for quite some time, all of us have been grappling with this question. A proactive approach from them would also help in terms of postal department's technology gap on financial inclusion. The government on its own has already identified several initiatives that the post offices can undertake and go forward. I think the advancements that Mr. Singhal mentioned from the RBI hub, I think they would be equally important for taking the technology frontier forward.
Go ahead. Yeah.
I'd just like to add, as Mr. Raman said, obviously we have built the best identity rails, the best payment rails. The challenge is if we have to go to a $5 trillion economy, the credit rails need to be strengthened. So SIDBI is obviously doing its thing. At the RBI Innovation Hub, we have just launched what the governor announced in the latest monetary policy, public tech platform for frictionless credit. Basically, if I can afford to say, it's a new DPI in the making, where we are enabling any lender, including obviously working closely with SIDBI, to do a rule-based loan, personal loan, MSME loan, and I'll talk about nano loans as we call it for micro entrepreneurs, the 4 crore entities that he spoke about, Kisan credit card loans, dairy loans, basically changing the entire narrative on small loans and even MSME loans and nano loans. That's a big initiative, and I can talk more about it when you get a chance. Re-engineering, reinventing banking, and if I can afford to use the word, basically the credit moment in UPI, I think Mr. Raman, both of us agree, has arrived with the way the government, RBI, Innovation Hub, and SIDBI are coming together to reinvent loans and credit in the country.
I just noticed that so far the questions have come only from the male members of the audience. Are there questions from ladies in the audience?
There's one.
Please.
In the middle.
Sorry?
No, in the middle. The lady.
Oh, over there as well. Okay. Whoever has the mic first. This lady here.
Hello, sir. I run a small export house and I have one complaint. It's like we have heard so much about pre-packing credit loan, post-packing credit loan, but when we go to the bank, the simple answer we get is, ये सब किताबी बातें हैं, होता नहीं है. So I've been struggling from the last 6-7 months, and in spite of getting good orders from the export orders, I have not got that. Why is it, and how to face this challenge?
A fair question. I think you had a question as well. We'll answer both together.
Hi, I'm Swati. I work with Women's World Banking, which is a not-for-profit working in the domain of gender and financial inclusion. My question was actually around the skilling piece that you'd mentioned, Mr. Raman. It is very expensive. It takes time. We expect or we want a lot of CSOs and a lot of people to step in. I think with all the digitization and the ability to really build for scale, I think the moment could have arrived for providing the non-financial services at scale at a low cost that the financial service providers can do it. And I just wanted your opinion on that.
I think both are great questions. I think unfortunately both of them you have to respond.
So I really don't have an answer, ma'am, for your problem on the pre-shipping and the post-shipping credit. I can only offer that if you tell us the details, we'll certainly try and help you on that. I mean, it's probably something isolated in a particular bank, and it could just get resolved. It's not a systemic issue, is all I'm trying to say. It's not something which the larger society or the exporting MSMEs are really facing. I think they are, and frankly, all the banks are chasing the MSMEs who are exporting. So, I'm surprised that you are probably in a small, sort of snarl. We'll, if you pass the details, I'll certainly, try and, get it resolved. But on your point of the non-financial services getting delivered through the financial service providers. So conceptually, we completely agree. We are all trying our level best to try and see how best we can ride the non-financial services on the same delivery platform. So I would only say that who are those who are identified for what particular type of non-financial service? I think that is really where the digital play has not yet matured. So, there is, as we say, if just the MSME sector, you're talking 60 million people who are probably in need of some non-financial service, whether it is accounting, whether it's marketing, whether it's, just understanding of, should I remain a proprietorship or should I become a private limited company? Now, you need a lot of mentorship. So, there are rails being created, at least from the startup space. I can say that there is a large mentorship program going ahead. But again, we are missing the real requirement because the startup space is a more educated and a more, sort of healed bunch of people. But I totally agree with you. If we go down to the villages, I have seen in a few states women transitioning from proprietorship and creating private limited companies. I mean, it is fascinating to see that happen. But we are unable to reach them. And I'm with you. We can only, according to me, work with assistance, which is the SHG group or the JLG group or the MFI or the BC. And we have to try and get that identification much better.
Mr. Bansal, you wanted to add something?
Yeah. Just quick comments on both the questions. One is obviously, not as RBI, but my individual capacity, I will tell you that yes, there are biases against women in financial services. Again, it might sound like I'm advertising our work. We have a large Sonari program which we have started, which is gender intentional financial products and processes. Whether it is collectives like National Rural Livelihood Mission or individuals. So we're trying to make a difference, but at a personal level, I agree. I have a lot of friends who are women startup entrepreneurs. They are well accomplished, more accomplished than I am, but they find a problem in raising funding. It's a reality, I'll be honest. So on the other question you said, non-financial. If you look at the landscape from 2009-10, Aadhaar, pre-Aadhaar, FI 1.0, proprietary biometrics, offline smart card, 2 micro ATMs which the Aadhaar team started, AEPS. There are a lot of providers today, 20 million BCs, which provide non-financial services on top of the financial services BC rails. So things are moving, and it might sound very distinct, but when we designed Aadhaar-enabled payment system, we were very clear. On top of it, somebody will buy fertilizer. at a rural village using a micro ATM, somebody will buy a cycle. So that is what makes it more better business for the financial sector rails, as well as makes better value addition for the customer.
I have a question following up on the lady who had some issues with a particular financial institution. Now that we are trying to onboard micro, small enterprises, and Mr. Koshi spoke about ONDC's potential. The moment you are getting there, you're visible on any network and then and also facilitate transactions. We have to make sure that those enterprises are not financially constrained if they have to access global markets, etc. So is there some thought process where this DPI architecture can work with ONDC to make sure that there is a certain seamless provision of finance?
So I'm sure Koshi would have spoken about the whole, embedded finance that we are building into ONDC itself.
Okay.
So it's already there in typically an Amazon setup, but it's certainly happening. I mean, we're all working towards that.
That's very good to hear. And Mr. Professor Chaturvedi, I think he made a point about, in response to that lady's question, that we have seen some proprietary enterprises expanding into private limited companies. That's wonderful to hear. I think, is it part of your Center for the Global South that we document these instances where scaling up happens? Because one of the things we lack in developing countries in general is the Mittelstand, where you have a vibrant MSME occupying the middle. And to that extent, if there are cases like this happening, I think is the center looking at just building a bank of such case studies.
No, definitely. We have twin objectives. One is to document the cases which are coming in from various countries. So a call for a specific kind of accomplishments across countries would be on. The second would also be to collate such experiences and bring in whatever necessary changes are required in terms of moving towards open sourcing. And that would help us come out of the proprietary frameworks where specific impediments are coming in moving forward. And that dimension, particularly in health stakes, they are multiplying. So we would get enough evidence to push them in for overcoming such barriers.
That's wonderful. So I have a final set of questions for the panelists, but before that I would like to see, let me give options to somebody who hasn't asked a question before, please, if you don't mind. Yeah.
Yeah, sir, a small suggestion.
Please.
As we are talking about the supporting MSMEs in the country, basically we can use the restructure the district industry center and also set up the block industry centers so that we can cover the industry in the village area. And through that we can provide the non-financial services. Because as the madam raised the question, this is the serious problem. In my own survey also, I have found that MSMEs are not able to get the finances from the banks. And there are many reasons that I cannot point out here because this is the small time we have. But we need to have the research-based, I think, policy-oriented feedback so that the government can address it. This is the small suggestion I want to place.
Good. It's a useful suggestion. Thank you. We take it on board. If there is anyone who hasn't asked a question before, gentleman at the back, please.
Good evening. Thank you for this great discussion. I wanted to know, while Aadhaar is of course a most prominent ID in the country, but can we look at how can we establish one Bharat, one KYC kind of concept, and what kind of steps should be taken towards that direction? Maybe a role of CKYC or whatever you may want to suggest. As a panel, you want to suggest
given
that.
the answer also.
He says you're given the answer as well. So
yeah, but I only see that from the banks, not so much from say in financial markets or any other place. I want to really.
No, but I would say, frankly, if there is a common database which is being used by banks, and therefore you're talking about, several crore, probably what, 25, 30 crore people who are within the CKYC, it could certainly get expanded with the right checks and balances for a larger population to use it. And I can say that from my own experience at SEBI, the KRA that was created in the capital markets is practically outdated, and you need to look at now having a common KYC, which Rajesh also talked about, that KYC is still a burning issue, but I think it's more of bringing together people who are all regulated entities across whichever sphere and getting them to share that database.
So I have one question, the same question I will ask all the panelists. Let's start with you, Mr. Bansal. So now we have Jim Sahai he spoke about, and Mr. Raman spoke about triangulating GST, income tax, and bank statements for providing access to credit. Now, we have a problem with the payment culture among large enterprises. To what extent can DPI help improve the payment culture in the country, if at all?
So you are asking about large corporates?
Yeah. Oh, no, it's large buyers. I didn't say large corporates.
Okay, I get it.
It could be
large buyers. So, honestly, the current threats that was conceived by RBI is one of the best ways to resolve that, but unfortunately there are some operational issues, including incentives for the large buyers, which are still unresolved. If we solve for them, then I would say threads. I mean, it worked beautifully in Mexico. It is the best way to ensure that large buyers are disciplined, so to say. But the way it is state level, monitoring of threats, that is honestly an issue which needs to be resolved.
I think your answer is actually a segue into another seminar on what is hampering trades in India, right?
Okay.
So good, thank you. So now, please.
Yeah, so I think Trades has certainly done its bit and it's growing. So, I mean, we are co-partners with NSC on one of the Trades platforms, and therefore we are monitoring that on a regular basis. It is great, but Rajesh is entirely right that you can bring a horse to water, but you can't force it to drink. So, you know, the large buyers are probably today happy not paying the MSME. And therefore, they have no compunction. They're saying 120 days, 180 days, whatever goes. So I am actually very hopeful what Madam brought into the finance bill, which is now law, that you will not be allowed to expense something if you have not paid the cash. How that's going to get implemented, I think, again, it's technology that will come to help, but I'm sure that if it is brought in and we have few cases where we crack down on a few large buyers, it will straighten this out.
Thank you. Saj, your answer?
I don't have any specific take on this. I think both of them have responded, and as towards closing, Ms. Manan very rightly mentioned, enforcement is something that government is interested in. The wherewithals would come from technological solutions, and we would have to have faith in that.
My second question to all of you. 5 years down the road, if you have to think of DPI and financial inclusion, whether it has achieved, what would be one or two metrics you would look for to say that, yes, DPI has succeeded in achieving financial inclusion? What would be those metrics?
So I take the liberty of going back 10 years when we started Aadhaar as a founding team.
Okay.
Our mission was clear. If 1 billion people will have a digital identity, 1 billion people should have frictionless access to an account. Now, beyond that, usage and now credit. I mean, in my world of RBIH, I would say our mission being frictionless finance for 1 billion Indians. By 2030, everyone, every adult should be seamlessly able to pay. It's able to save, able to, receive money, credit, the way they want, when they want, how they want, like a phone, like a music app. That's what DPI can enable. Because going back to our cassette days, right? So that's what is our dream.
Okay.
So very quickly, I think the identity layer for individuals is clearly Aadhaar, and that is the base of the DPI. I would say the identity layer for a commercial entity is the Udyam certification, which should completely be seen as the Udyam Aadhaar, as it was earlier called. Upon that, if we can even come halfway close to that 25 lakh crore of credit gap, I think we would have really achieved. And I think the entire MSME sector would have caused that buoyancy to cause GDP to certainly, go faster than the targets that we have currently put to ourselves.
Okay.
I think as our part of our negotiating team, you know it much better than any one of us, how difficult it was to place Indian narrative on DPI and DPG forward. My idea would be to retain this unique Indian model and prove the success, not only in India, but across the global south in next 5 years, just to make the point what middle path we have come on and what kind of low-cost access to capital, low-cost digital transaction, and as Rajesh very rightly said, low-cost inclusion in the business. Mr. Manan elaborated that in terms of firms, but I would say here is a narrative, unique Indian narrative that has to have evidence, that has to have, in next 5 years, our ability to prove it.
The lady over there had a question, please.
Hello, good evening, everybody. My question is actually an extension of Dr. Nageshwaran. So, will you say that DPI is going to provide an absolute solution to the financial dualism that will get created?
Financial dualism?
Yeah. So
which is?
Which is the
have
difference between the organized and unorganized sector money market. So, so in social sector, we call it development dualism. So, it's financial dualism. Will DPI provide an absolute solution, or it is a relative solution which will further develop over the years?
So let me just, go ahead, please.
Sorry, go ahead.
No, I'm just saying that the simple point is financial dualism will certainly disappear, because the amount of credit that will start chasing both individuals and firms with the ability to bring down NPA rates. I mean, see, today, why are banks worried? Because they don't want to have an NPA at the end of it. They fear an NPA because they don't have enough information. So one is the credit decision, second is the monitoring. A lot of the DPI is just going to come and help us do the monitoring much better, and AI is going to come in and actually tell us that it is in this geography, that PIN code, you are probably seeing a red flag. So once we have those tools, and we're already working on that, I would say the flow of credit will go up many-fold because the risks have come down. We have mitigated those risks.
No, I mean, you just summed it up, but just to give you an example of 50 million non-entrepreneurs. The fact is, I think more than half of them today have a UPI QR code. That lending will change the landscape of credit and access of credit to most of the non-entrepreneurs also.
I am willing to lend 35 seconds of my time to you to ask your question. Make it simple, please.
Yeah. It would be better in such forum we involve the NABARD and the RRBs also, because now our future for financial development is the rural India. So they can also be invited so that we will get some more fruitful suggestions from them. Thank you.
Thank you. Point taken. I think we are through. Thank you very much, ladies and gentlemen. Please give yourselves a round of applause for a very active participation. And also, on your behalf, I would thank the panelists for game enough to answer all the questions, not only the ones that we post, the one that you post as well. And in terms of summing up this session, I think what came through was the palpable excitement and the potential that DPI has, not only for India, but also for the entire developing countries. Certainly, in terms of its potential and the milestones we would like to see achieved with respect to DPI and its impact on financial inclusion will be the number of MSME enterprises that are today informal that go on to become formal, and also the number of MSME enterprises that actually go on to become large enterprises, if not very large, but at least medium to large enterprises. So the metrics that we should look for in terms of DPI's potential being realized would be some quantifiable and measurable metric on formalization and on scale, creating scale. But I think those possibilities are definitely there. And some of the things we heard, not just in this panel, but also in the earlier panels, are all coalescing around realizing those objectives. So we are on the cusp of a very exciting journey, and I'm very glad that RIS is going to host the Center for mapping digital transformation, not just in India, but in the entire global south. 130 countries already they are in touch with, and that the repertoire of experiences that they will accumulate and then share among the member countries will be extremely vital. Mr. Raman mentioned earlier in his remarks about 76% penetration of QR code among MSMEs, but then the kind of data and information that it would generate, both for lenders and for other service providers, for MSMEs, and also understand their cash flow cycles will be extremely useful. So again, there is vast potential out there. And I think Mr. Bansal's answer on TREDS was an excellent one in terms of setting up the stage for having a more open discussion on what is ailing TREDS in India, or rather, what is holding it back from realizing its potential as it happened in Mexico. So it will be good for us to understand how Mexico overcame its initial teething troubles. I'm sure they would have had their own challenges as well. So I think in all, we had an extremely rich discussion, and that brings us to the close of today's seminar on strong, sustainable, balanced, and inclusive growth. I hope you all had a rich harvest of insights and information. Thank you very much for being here, and wish you a pleasant evening.
Thank you very much to all the esteemed speakers for an insightful discussion. With this, we come to conclusion of today's seminar. Thank you very much for your participation. High tea is available in the ground floor, Nalanda. Would request you to kindly join, please. Thank you so much.
Very good. Very good.